we begin our board hearing. There has been a request. We think we're going to need 3 days in December scheduled. We are scheduled right now for the 11th and 12th, which is Monday, Tuesday. There has been a request to change that to 12th, 13th, and 14th. And if members would check their schedules, because we do believe we're going to need 3 days. It's going to be a busy final hearing.
I'll check. I think I can make the 13th.
Were you the reason we did 11th and 12th? Well, why don't you check and get back, but just take note of that. Ms. Richmond, yeah, things are getting pushed off, and we're going to have some Section 40 approvals and other things coming through that. We got a lot coming on, delays in cases that shouldn't be, but are, or for whatever reason, and so a lot of stuff's being pushed off till the December month. So, Ms. Richmond, would you make a point to call Member Horton and then get back with me, because everyone else seems to be okay? I just knew there was a reason we were 11 and 12. I don't know why.
Madam Chair, I just heard you say delay in cases. I wasn't necessarily aware of that.
Yeah.
We need to
We're trying to
assure ourselves as well as the public that those cases have a legitimate reason for being delayed, and that delay.
Well, that's what we're trying to ascertain. We are scheduling them from our side. BOE is scheduling them, and if anyone causes any delay, it's not going to be on our head. We are definitely taking care of BOE interests, and we are supposed to have these cases, and we will continue to hear them through the end of December. So, because there's been other things come up, I just want to be sure we've got 3 days for December.
Thank you, Madam Chair.
Okay. Welcome back to the Board of Equalization. This is day 3. And Ms. Richmond, will you please or we need to take roll.
Chairwoman Harkey.
Here.
Mr. Runner.
Here.
Mr. Horton.
Here.
Ms. Ma.
Here.
Ms. Stowers.
Here.
Okay, we do have our quorum. Matter of fact, we have everybody. So, Ms. Richmond, will you please introduce the first item?
Good morning, members. Our first item on this morning's agenda is item C, Sales and Use Tax Appeals Hearings. Item C2, Robin Groth-Hill. Please come forward. Board Proceedings has received contribution disclosure forms for today's hearings from the parties, participants, and agents. All forms are properly completed and signed, and no disqualifying contributions were disclosed. All parties, participants, and agents are on the alpha listings provided to your office. Each person sitting at the table will be asked to introduce themselves and, if necessary, their affiliation with the taxpayer for the record. 10 minutes is allocated for the taxpayer's opening presentation, followed by 10 minutes for the department's presentation, and 5 minutes is allocated for the taxpayer for rebuttal. Ms. Harkey.
Thank you. Mr. Anjija, will you please introduce the items of this appeal?
Good morning, Madam Chair and members. I'm Jeff Anjija on behalf of the Appeals Division. The appeal before you involves 6 unresolved issues, which are: 1, whether petitioner is personally liable as a responsible person for the unpaid liabilities of Groth Oldsmobile pursuant to Section 6829. 2nd, whether adjustments are warranted to the tax assessed in the determinations issued to Groth. 3rd, whether the 40% penalty for failure to remit collected sales tax reimbursement is supported by clear and convincing evidence. 4th, whether relief of the late payment, failure to file, and finality penalties assessed against the corporation is warranted. 5th, whether Groth was negligent during the liability period first quarter of 11 through May 17th, 2011. And 6th, whether relief of interest is warranted. And I would like to remind the board that this is a Section 40 matter.
Okay, thank you. Ms. Hill, please, you will have 10 minutes to present your case, and then the department will have 10 minutes, and then you will have 5 minutes on rebuttal. Then we'll come back to the board. We'll probably ask questions, which, of both sides or either side. And so if you would begin, please introduce yourself for the record.
Sure. My name is Robin Groth. It's actually Groth-Hill. And I apologize because I was not expecting a hearing such as this, because I had a hearing in Oakland a few years ago, and the I don't know what you want to call them, the administrator, investigator, I'm not sure what position they held, but they had, I guess, resigned before the case was concluded. And so I was called and told that the case, we'd have to go back over everything again. So quite honestly, coming here today, I expected to be sitting in a conference room with, a number of people again going over the audit that had taken place because we did disagree with it. But I'll do my best to present what I believe, that you would need to know about the situation. My family owned a Chevrolet dealership, began in 1934. And 2008, General Motors, had gone through their preliminary bankruptcy. At that time, they were going ahead and putting a lot of pressure on all of us dealers, Allied Bank as well. Back then they were GMAC, and they were doing curtailments on all of our inventory. In addition to doing that, they were restricting our credit. We used to have about $3 million worth of inventory on a regular basis, and they came back and capped us at about $1.5 million, which basically was half the inventory we were used to carrying. Again, we had been in business about that time, about 75 years. Very successful. We owned our own land. We had our expenses in control. There was never a problem. And 2008 changed everything, not just for myself, but for hundreds of thousands or thousands of dealers. At that point, General Motors made it very clear that they wanted certain dealers to basically just go away. And so they did approach me and asked me to voluntarily terminate, which I declined to do because I had just purchased a new piece of land that they basically forced me to do. I was downtown and they wanted me by the freeway. So from 2006-07, we began the purchase of this piece of land. And then again in 2008, everything turned. They reduced our inventory. They made it much harder. The criteria for selling cars was much harder than it ever had been. So our sales, just like every other dealer in the nation, pretty much tanked, and it became, just a difficult time to do business. But again, on the flip side, we had been in business for so long that we were financially secure. We were just trying to do our best to remain a dealer. When the General Motors clamped down with their curtailments, they actually hit my family for $1.7 million to stay in business. It's a little bit more complicated than that. They require curtailments. They required that we put $750,000 in a cap account, basically to guarantee our floor plan. And again, at that point, our floor plan was about $1.5 million. They had reduced it in half. So our sales obviously were dramatically inclined because of that. We went from selling, maybe 40, 50 vehicles a month down to selling maybe 15, 20. We did a lot of service business, and we also had a body shop, so that's how we sustained through that time. And then came 2009, when General Motors actually sent out their letters to their dealers. We, again, at that same time, were taking hard money loans because we could not take dealership money to do the financing. We had to take it from personal basis. They made us take it from personal basis. Our land company, which was a totally different company, had to take a monetary loan to go ahead and give the cap money that GMAC wanted. And then, June of 2009 is when the bankruptcy letters went out to all the dealers. And because I was a minority female dealer, I was given a letter to continue. Although my representative had come to me and actually handed me a termination letter and asked me to self-terminate. Again, we had been in business at that time 76 years, and we vehemently denied doing that. They made it very clear that they had a plan, and we were not a part of it. But we continued forward, and they continued to cut my credit, even though GMAC was a different entity than GM. GM still had not a controlling, but they still had an interest in it. And, they just cut our inventory. They made us pay curtailments of all of our inventory. They made it just as difficult as they possibly could for us to do business. And we did everything we possibly could. We put up private money, our own money, because again, we couldn't take it out of the dealership. They wanted us to personally guarantee our line of credit with them. And so I put my own home on the line. I put my dad's home on the line. My brother put his home on the line. In 2010, GMAC, even though we were, given a very small line of credit, took us to federal court and attempted to get a TRO. And the judge denied them because they had absolutely no reason to do it. We were financially sound. We had $750,000 on account with them, and there was no reason for them to put us out of business. At that same time, GMAC took all the vehicles off of my lot and took them to ADESA, which is the GM, or no, it's not GM, it's just a big auction site in Tracy. 7 truckloads of vehicles went over there, and we had to pay over $20,000 to get them back after we won the TRO. After that, they cut my flooring line for my used cars completely. So everything I owned was owned outright, which again, I at that point didn't have a lot of inventory because we normally finance everything through their auction. And then came the new cars. They decided to terminate me as far as my floor plan in December. They were supposed to go to the end of the year. They cut it 10 days early. And subsequently, I lost all of my orders in the order bank. So I had no vehicles coming to me. So we had our $750,000 on account with them. So they had to give that back to me. And we went and bought the vehicles back from the dealer that subsequently got all of my vehicles, a new dealer that they had just assigned a point to. And we didn't have very many vehicles on the lot at all. And in my interview with the first interview that I did, we spoke about that with the auditor that was coming out and then her supervisor. The reason her supervisor came is because the auditor was her first car dealer audit she had ever done. Now, again, we had been in business for, at this point, this was coming into our 78th year, and we had never had a problem with our sales tax audit ever. And my office manager was running it because I was in court pretty much daily with General Motors. And my office manager couldn't communicate with her, for one, and two, she didn't understand anything my office manager was saying. So when I was in the office, I would go in there and speak to her, and we would try to clarify what she was looking at, because she didn't understand what she was looking at. Her supervisor then came, and it was noted, I think somewhere in the report, that the supervisor even made comment that there was no vehicles on our lot. We had maybe 5-6 vehicles total. And so the figures that were given for the last, 2-3 years of our business were so far off in what they reported our sales tax. And again, this is based off of the lady doing the audit. And the last meeting that I was at in Oakland, we had gone over just a month as, she gave me a month spreadsheet of the report of sales that not the report of sales, but the ledger balance, I guess, that the auditor was looking at. And most of those were what we call courtesy deliveries. A courtesy delivery is when you take a vehicle in for another dealer that does a lease and they drop ship it to you because the driver's in your area. That's all we ever did in the end because we didn't have vehicles. We didn't have the ability to get vehicles from General Motors or GMAC because GMAC cut off our flooring line with General Motors. So we had no vehicles coming in from the factory whatsoever for the last 10 months of business, 11 months of business. The things that she was looking at were vehicles that did have a report of sale because they had to have a report of sale for California. But these were vehicles from Wheels Incorporated and, I can't even remember all the names of the different companies. It's been 6 years. But we did a lot of courtesy deliveries, and I pointed that out to them, and then I didn't hear anything from the report until I got this notice of this appeal hearing. And again, I thought it was going over what we had gone over in the conference room in Oakland about 2-3 years ago. I can't even remember how long it has been. So I apologize for not being prepared, but quite honestly, we ended up having to file bankruptcy in the very end because General Motors did terminate our franchise. Ultimately, they got what they wanted, and we tried to file bankruptcy to protect our contract, and they had, gone around it, of course, and we lost all of our rights, past, present, and future legal, so we can't even sue them. They pretty much set us up and, kicked us out. I have no rights to the records because of what they did, nor do I have any of the records. When we filed bankruptcy, they came in and they actually removed most of the financial records. What was left there were car deals, and there's a new business in our old site, and I know they said they've been removed. I went to go find them after the last hearing we had, and they've all been removed and destroyed. I don't know by who, but they've been in there for a year or two possibly at that point. So again, I apologize for not having anything more, sufficient for this, but my hands are tied. I was at the mercy of General Motors. They wanted us out of business. They made it clear, and I guess I should have taken the first exit route out in 2006 when they made it clear they didn't want me as a dealer, because we pretty much lost everything.
Thank you. I have a question to ask you. I would like to proceed with the hearing, but I need you to determine you want to proceed with the hearing here. Because you said you weren't aware it was a hearing. Do you have any records that you could have brought anyway?
No, I don't have it. I don't own them, so honestly, it's not even my right to go and request them from anybody. I know our computer company had the computer. Again, it's been 6 years, so I don't know how long they keep them, but it's not even my right to go ask for them. And, one of the things that General Motors made it very, very clear is that I lost all my rights to the dealership. We did attempt to sue them twice, and both times got thrown out because our legal rights in the bankruptcy were sold, which normally, I guess, from what I'm told, that's very unusual. Well, I know General Motors wrote the sale contract because it was a dealer next to me that took over all the rest of the dealers that got my franchise. And he, of course, closed it down, so he would have a stronger point in the next town.
Okay, well, I think I'd like to proceed with the hearing, if it's okay with you. Mr. Naranjo, do you have any comment or suggestion to make? I would like to know if this person was notified in the normal course, and if so, what that constitutes.
Madam Chair, members of the board, according to the records that I reviewed, it appears that there were numerous notices sent. There were attempts to have a hearing or meeting with Ms. Groth, is it?
Groth, yes.
Yeah, thank you. Several times, for whatever reason, those notices were not returned. Petitioner did not respond. It appears that she did not receive those notices or were aware of the hearings, because there were several attempts to try to have a meeting which did not occur. Ultimately, it looks like the department went ahead and entered a decision
Right.
in light of that.
Well, we have a lot of questions. I have a lot of questions on the audit policies and procedures, but I do need to be sure that we're okay to go with this hearing. And maybe what we do is we proceed with the hearing. If the appellant wants to have something done afterwards, we can do so. I don't know.
Yes, that's in the board's purview, so at this point, you can proceed and at least listen to the department's side, and then the board members can decide what to do at that point.
Okay, thank you. Okay, thank you, Ms. Groth.
Thank you. Good morning, Chairwoman Harkey, members of the board. I'm Scott Claremont from the Department of Tax and Fee Administration. With me are Stephen Smith and Dario Romano. We concur with the recommendation of the Appeals Bureau that petitioner is liable under Section 6829 for the unpaid liabilities of Groth Brothers Oldsmobile, Inc. Those liabilities arise from an audit for the period from January 1st, 2008 through August 24th, 2011. Because of the timing of Groth's bankruptcy filing, the liability was issued as 3 different determinations. A small portion of the liability also stems from a partial remittance return for the first quarter of 2011 that was signed by the petitioner. During this audit, staff compared Groth's general ledger journals for its sales tax accrual accounts with the amount of tax reported on its sales and use tax returns. Staff verified the accuracy of the tax accrual account journals by comparing them to the individual sale agreement documents provided by Groth for a portion of the audit. From the first quarter of 2008 through the first quarter of 2011, Groth recorded in its sales tax accrual accounts a total of over $2.4 million in tax, but reported only about $520,000 in tax, resulting in underreporting of almost $1.9 million. This corresponds to a measure of about $20.5 million in unreported taxable sales, which corresponds very closely to a $20 million difference between the total sales reported on its sales tax returns versus what it reported in its income tax returns and what is represented in its books and records. In sum, the liability is based solely on the amount of tax Groth recorded in its accrual accounts. It was verified with source documentation from individual transactions that were provided, and it corresponds to a similar discrepancy in the total sales reported. Petitioner has not offered any evidence as to why the amount of tax that it recorded is not accurate. Additionally, under Section 6597, any person who knowingly collects sales tax reimbursement and fails to timely remit certain thresholds amount of that tax to the board is liable for a 40% evasion penalty. Here, the amount Groth failed to remit is far in excess of the minimum required, despite its evident knowledge of the sales and use tax law and its long seller's permit history, and despite clear discrepancies between its reporting and its books and records. Groth systematically failed to report more than $20 million in taxable sales during this period. There is thus clear and convincing evidence of fraud to support the imposition of the 40% penalty. Turning to petitioner's personal liability under Section 6829, a person responsible for sales and use tax matters is liable for the tax, interest, and penalties of a terminated corporation if the person willfully failed to pay the tax. Here, there's no dispute that the business terminated. It's also undisputed that sales tax was collected as reflected in the sales agreements and other records and confirmed by statements made by petitioner. With regard to responsibility, petitioner is variously identified as the owner, CEO, secretary, director, and vice president on several documents, including those filed with the Secretary of State, EDD, and Board of Equalization. During the period, she signed sales tax returns and signed a letter to the BOE discussing payments and liabilities. She also had numerous discussions with staff with regard to sales and use tax matters. It's reflected in the automated notes that she stated she was the sole person responsible for financial decisions. A failure to pay is willful if the person had knowledge that the taxes were not being paid and had the authority and ability to pay the taxes but failed to do so. Here, in addition to all the facts I stated, petitioner has also stated that she was at one point the controller of Groth, yet she filed the returns in which the large understatement was reported. Given her role and the significant discrepancies between the amounts reported and recorded, petitioner had knowledge of the failure to pay tax when due. Again, based on her admitted role in the corporation and the fact that she signed checks to the BOE, petitioner had the authority to pay the taxes. With regard to the very final part of this period, after Groth filed for Chapter 11 bankruptcy on May 24th, 2011, it maintained control of its affairs as a debtor in possession. Thus, petitioner had the authority to pay the taxes that it incurred during June of 2011, which came due July 31st, 2011, which was prior to the conversion to Chapter 7 bankruptcy. And lastly, Groth collected the sales tax reimbursement and throughout the audit period had cash receipts far in excess of the amounts needed to pay the taxes when they came due. Groth made significant payments and withdrawals from its bank account during this period and also made regular payments to employees and suppliers. Thus, petitioner also had the ability to pay the taxes when they came due. In sum, all of the elements are met for petitioner to be held personally liable under Section 6829, and we concur with the recommendation of the Appeals Bureau. Thank you.
Ms. Groth, you have 5 minutes to make an additional response.
Okay. Just to start kind of with the beginning, you had made a comment that they were reconciled to the sales journals. That is where we actually had a problem with the auditor because she did not understand the sales journals. That's why the supervisor was called in, because she wasn't able to match the different sales to the journals, and one of those being that the fact that the courtesy deliveries are recorded separately, because we do collect the DMV fee, and that is a report of sale generated, but it is not sales tax that we collect. It is collected, but it's not collected by us. It's collected by whoever the leasing company is. And on the last meeting, again, I don't know what that was called, in Oakland, we went over a month worth of these sales. And, there was numerous vehicles on there that were courtesy deliveries. They even had a vehicle that I bought, which clearly I didn't buy a vehicle, listed on there. So I know that was incorrect because she had pulled from different sources, and I'm not sure how she came up with her list. But again, that is why the supervisor came out, I think not only once, but I think the supervisor came out twice to help her. This auditor was there over probably a 6-month period. And one of the things that came up is that my role in the dealership, yes, I was financially the person because I was the main owner. My brother is my partner, but I'm the main owner of the dealership. And I, of course, will take financial responsibility for my business. But I was the controller from 1992 to 1998. At that capacity, I was in the accounting office. I did handle the books. From 1998 to when we closed in 2011, I was the dealer. I was not part of the office staff. I did not do the financials. I did not handle that part of it. I did dealer stuff, like going to court with General Motors, handling all of the employee oversight issues with managers. I was not directly in charge of anything financial, although I did sign the returns because I signed pretty much anything that I signed tax returns, I signed paychecks, I signed anything that had to do with a financial business, but I was not the one doing the reports. Let's see, what else did I write down? I know in the last meeting that I had that they said that 2011, the sales tax was 200 and something thousand, I think, for the year. And we specifically zoned in on that because, again, we had no vehicles. We had maybe, in the very end, maybe 6 vehicles in the lot, and they were all extremely old used cars. I talked to the supervisor specifically about that, like how, not the supervisor, but the auditor, how that they came up with that figure. And I was told that it was averaged, that they had actually taken an average because our return was not turned in. And at that point, we were in bankruptcy. And again, I don't know what tax period finally, I don't know the last tax period that actually got reported, but I know I was in bankruptcy court pretty much weekly, and they told us they were converting us in July. And so we were trying to figure out what we were going to do to continue the business. And I don't know what the last report was, but I know that it then went to the trustee, and we specifically talked to the trustee when we got our first letter about not having the reports done, and we were told that basically that wasn't really a concern of theirs. Our employees didn't get W-2s. There's a lot of things that didn't happen. The trustee had a very limited scope in doing anything financial for the dealership. So again, I'm not sure what the last reporting period was, but we definitely did not do the volume that was estimated on one of the reports that I viewed. It was just way off. And I believe the sales as well. I believe that the figures that are being stated on here are overvalued. We've never done a high volume of cars. We're, 50, 60 car dealership. And, of course, the cars are, 50, 60,000 apiece. But again, from 2008 until we closed, we just didn't have the vehicles. We got our credit line cut, and I might be able to come up with those emails, because I did have emails that were saved on my computer about them cutting our lines and how, it was affecting our sales. But I believe the figures are completely off. I've never agreed with them. I've always, been adamant that I don't believe the audit was done correctly. I was never able to view the audit. I guess it was given to the trustee who, he said to me that he disagreed with it or he disputed it. I don't know the exact term. And that, he never heard anything after that.
So Chairwoman Harkey, one option that the board has at this point is if the board concludes that this matter is not sufficiently developed at this time and ready for hearing, the board, as you may know, can continue this matter or defer this matter and direct that the Appeals Bureau conduct an appeals conference with the petitioner.
My problem with that is that I do not want this pushed off into where we don't get it back. I've spent a lot of time on this. I do have some data to add. I think at the end of my questioning, if the board wants to delay this just to be sure it comes back to us, I would approve, but I think it's, she doesn't have records. She might be able to produce some emails that shows what happened with GMAC, but her records are gone. So I've got the file, I've analyzed the audit, I have some serious questions on the audit, and maybe when I'm through, we could take a poll and see where everybody thinks they might want to be on that.
Just want to provide the option.
Yeah, I understand that.
Madam Chair, if I may, I would defer to the appellant on this. The department has indicated that the communication was never delivered and that they weren't aware that the hearing was taking place. The taxpayer has testified as such. I think we could have conversations, discussions that might give the taxpayers some direction, and that would be helpful. But for purpose of this, of hearing the case, I think it's in the interest of the taxpayer, irrespective of the amount of time the agency or we individually may
Well,
have to
I
do.
don't want this shoved off to the CDTFA. Let me be
And I
very,
get
very
it, I get
blunt
it.
on that.
And providing the taxpayer with some direction in continuing the case to next month would allow the taxpayer an opportunity to come back, allow the agency in the interim to, because I agree, I think there's some additional work that needs to be done, to do that additional work and see if they can come to some concurrence as a result of not skipping that process.
Well, let me ask one more question of our chief counsel. There is a lot of information and work that we have done, and we have a lot of questions for the department, but since we can't ex parte without a lot of notice, how do I get this information to the department unless I hold it here at the hearing?
I think we can have the discussion. I don't want to answer, but
Okay, for purposes to comply with the ex parte, the obligation is if you provide information to the department, you need to provide it to the
It's
petitioner.
from the department's file. It's not new information. It's an analysis from the department's file.
Well,
There's nothing new I'm presenting.
all parties are here. All parties are here.
Right.
So
The
I
other
can
part of it-
You
ask
can
these-
present it here. That is correct.
That's what I want to do, because I'll consider this my meeting, if you wouldn't mind. I need to be able to share this information and get some questions from the department, or get some questions answered on the audit policy and procedure, because that's the biggie here.
And Chairwoman Harkey, after you have your discussion, the board still has the flexibility to continue this matter to a date certain, perhaps
Right.
October, which is back in Sacramento, as I understand it.
Okay.
And that way it gives a time certain for both the petitioner and the department to try to have that appeals conference.
Yeah,
Okay.
I would agree with
Yeah,
that.
we can fully discuss this and still continue the hearing.
Right.
Okay.
So there's nothing that
So-
concludes here and then bring it back then in time while it's still in our jurisdiction.
Do an appeals.
That was my point. I always want to be sure, because there's a lot of, I have a lot of issues. So is that agreeable with you, Ms. Groth?
Yes.
Okay, thank you.
The
I'm a
appeals.
little uncertain, but I'm I'll do whatever. I'm very cooperative. I'm not, I don't want to delay anything. I just want this to be over with, but, you know, certainly whatever I can do, if I need to bring more information or try to get it, I certainly will.
Okay, thank you.
Madam Chair,
Yes.
before you start your analysis, do we have copies so I could follow along? Can we get copies?
I can probably get copies. Yeah, I can probably get copies as I discuss it. A lot of it is my staff analysis, and a lot of it is just exhibits. Let me see what I've got.
I mean, maybe not your analysis, I understand if you
Yeah,
don't want
let
to
me-
provide
let
that, but
me-
maybe it's
let
something
me-
that's,
let
since the
me
record's
just-
incomplete right now.
Okay, this is all from the file. There is a, let me just begin, and then.
Chairwoman Harkey, excuse me for interrupting, but I was corrected by the appeals attorney here that there is not sufficient time before October to have both the appeals conference and a DNR, so it would be not a complete process before October, but I think there's still some value in trying to have an appeals conference between now and October. So,
Okay.
thank you.
Very good. So I'll begin this, but let me get a couple copies of this for the members. These items. Right. And this is the audit. If you could,
It would be like a 30-30-30. They're going
and then the rest is the audit.
to give up whatever she's got. They can respond, they can work it out.
Let me see.
The report, there's no way we can know.
Billing order.
She has something. She has about. I don't have a lot of PDFs. I have a lot of if something comes up. I have a lot of stuff, but not everything. No, we're gonna- Evident bills. I wonder if it makes more sense.
Madam Chair, I believe it's the appellant's turn to, or somebody's turn to.
No, it's time for our question back. She made her statement, and we have the
That's-
statements.
that's
If you
it?
let me handle this, please. Okay, we're just getting some copies for the members of some items. I just want to be sure it's everything I may wish to refer to, so they can refer to it as well and for the department. The first thing is in our review of the file, and this will be for the department, in our review of the file, we found that the auditor, although an experienced auditor, was auditing this company like a used car and not a new car. And so for 7-8 months, she was reconciling, let me get up here so I can have it in the lingo of the department. Okay, she was auditing, let me see, hold on. She was tracing deal jackets to the journals and not auditing Lisa's got a lot of notes here to me, and I've got them here too. Let me see. Okay.
Thanks.
The report of field audit for the period of 1/1/08 to 12/31/10, was that mailed to the taxpayer or to the trustee, and that's one of the documents that I'm going to bring up here.
I'm sorry, is that a question for me?
No, that's a
Oh.
question for the department. I'm sorry. On the copy that I've got here, it shows the billing and refund notice was mailed to Groth Brothers Oldsmobile, P.O. Box 5019 in Livermore. And this was after the trustee had taken over.
Yep. The final comment in the 414Z says that on 10/6/2011, sent audit comment and working papers to TP and trustee.
Right, and then when I look at what went to John Kendall, trustee, Groth Brothers, on September 10th, 2011, it says CC courtesy copy, and that's left blank. So it looks to me like it went to Groth Brothers Automobile and not to the taxpayer. Or and this final audit also went to the trustee. Ms. Groth, in this notice of audit went to,
P.O. Box, I never had access to it after we closed. He took all the mail. So we had mail that actually physically came to the dealership, and we had mail that would go to the P.O. Box, but we didn't have access to any of that or the records. The trustees' accounting firm came in and took all the records out of the dealership within 2 days. Everything was gone.
okay, thank you. As typical in a bankruptcy, everything goes to a lockbox. It doesn't really, the person that's filed doesn't get the data anymore. So in the audit, we have found that the auditor was tracing deal jacket sales to the journals, and that would be something you do in a used car. When the supervisor came in, and she didn't find anything there. When the supervisor came in, the supervisor started tracing the sales tax accrual analysis, which is when you do the you track the sales tax accrual to the, I guess, to the general ledger, perhaps. And that was the form of the audit. By the time that had happened, I don't believe Ms. Groth was still in charge, because the audit was delayed from the actual time. So can you go over the audit process? How it was pursued, because that's the information I have.
It only looks like the reconciliation of recorded versus reported sale, the recorded tax accrual versus the reported tax accrual for the the last 2 quarters of 2010 was the reconciliation with the deal jackets from those quarters took place, and that was also communicated to the, I believe that was communicated to the taxpayer
No.
in July.
The deal jackets were early on in the process, and then the
Counts as of April 8th, 2011 is like one of the dates on the schedule for 12A1B, which is a summarization of the sales tax coming at account 32400.
Right. And what this audit is really based on is numbers coming out of the entries taking money out of that accrual account. So where did the money go? Did the auditor ever determine where the money went?
The audit working papers do not specifically address where the money went, other than the heading for the column was General Journal A80.
General Journal 80 was what, Ms. Groth-Hill? Do you recall? Do you know?
God, it's been 6 years. I can
Okay.
find out.
When
I
you
don't
have
know
this
if-
large of an amount that's coming out of an account, isn't it typical in an audit to find out where it went? Or to try to attempt to find out where it went?
Well, I think there were some challenges that the staff had in sitting down and discussing those type of issues.
Right, I know that because the company was having challenges at that time. Ms. Groth-Hill states that she was processing, in essence, delivery of vehicles. And I do believe in the audit also states that the supervisor stated that there were very few vehicles on the lot. She was doing the deliveries of vehicles. Is it possible that the sales tax was paid by the company she was delivering for?
That is possible, especially if it's an in-state dealer that was the dealer that it was originally involved, and they had a permit. If it's, for instance, an out-of-state dealer without a permit, certainly the in-state dealer would be collecting tax. One thing I might point out, if on those transactions, the petitioner was not collecting tax, I wouldn't understand why tax was being entered into their accrual account as being collected and payable to the state.
Okay, Ms. Groth-Hill, can you kind of go through on your best recollection as to how you did the dealer deliveries?
Sure. So we would get paperwork in from, I know Wheels was a big one. There were several of them because we had Lawrence Livermore Lab in Livermore, which is, 8,000 people. And so many of their employees drive vehicles. And so we get the vehicles drop shipped to us, and then they service them and do everything at the lab. But typically we'd get a packet from the company, the leasing company that was leasing it, and we would be alerted that the vehicle was going to be drop shipped to us. We would do what they call the pre-delivery inspection, so it would run through our shop. We would detail it, and then one of our salesmen would deliver it to that customer. And we collected typically. We got a delivery fee of about $250, $300. That was our courtesy delivery fee. And then we collected the DMV fee because we would actually register it at DMV. So they would always pay us the DMV fee. Again, different companies had different ways of doing it, but very rarely do we ever get paid the sales tax to pay.
How would that have been entered, to the best of your knowledge, on your journals? How would you have entered these cars?
So I didn't do that part of it, but typically when we had a vehicle sale or something like that, then any monies, well, I'm trying to think, actually on a courtesy delivery, because a report of sale was generated, there was a specific person, our delivery person, that would do all of the entry of those. And I don't know if they took the full accounting, because we did have to account for the vehicle going through our shop and everything else. And then we probably would have to account for the sales tax that was on the report of sale, because the report of sale, I think, always generates a sales tax that's due. But again, it's not paid by us, it's paid by the leasing company that drop shipped it. So I don't know how they entered it because I was never a part of that. So I don't really know how the accounting on that went, but I know that we would process the DMV.
Okay. So to the department, because this is really the crux of the whole issue, is where these items went during this time. That's what's showing in the Journal 80 is a general journal, as I understand it. And could the entries in Journal 80 be courtesy deliveries? Maybe misaccounted, but courtesy deliveries. If there were no vehicles on the lot, or very few, as noted in the audit, and there was still, she was being billed for all of these sales tax.
Can I just point out that
Sure.
that comment was made on July 8th, 2011. So that's the very end of this audit. This audit went through 2008, 2009, 2010, and we certainly see in the audit work papers very little sales tax on vehicles used and new from that period. So the fact that a month before this business closed, there was very few cars seen on the lot is not inconsistent with this
But
dealership.
that didn't, what I'm trying to tell you, though, is what I'm trying to explain to you, that didn't happen overnight. There was a long process in this meltdown where her line of credit was revoked, so she obviously couldn't get inventory. How long were you doing vehicles, delivery vehicles?
We've always done courtesy deliveries. Probably more so in the last couple of years, because most companies have gone to leasing more for employees, that type of thing. But we've always been a big courtesy delivery. Other dealers don't like to do them because there's obviously not a lot of profit in it. But for us, it was service business. So,
Okay.
but the one point I wanted to make is that, we had, I don't know how often our audits were. I know every 3-4 years, I don't know, the auditor would come out, and we used to have the same gentleman, and he knew where our books were. He'd come and he would have my office manager tell him, he'd get a hold of her and have him, bring everything in the conference room. With this gal, again, my office manager dealt with her. I've rarely had conversations, only when it got escalated, my office manager couldn't communicate with her. I would go in there and speak to her. And we were actually having to pull the whole entire file of car deals. And the workers had to bring them in there because they're so heavy. But it wasn't reasonable to take them out and stack them. And she just had them all over the room. And that's when, we had mentioned that I think I might have even made a phone call asking her to have her supervisor come because we knew that she was lost in this audit. And I think you've probably seen that through the audit, at least my portion of it, is that she did not know what she was doing. And we pointed out the courtesy deliveries. I know we had specific conversations about the courtesy delivery. My office manager tried to tell her how they worked, and she just did not catch on to her that these were handled differently than a regular car sale, because there was a report of sale, and I think that was what was confusing her. There was a report of sale, and there was sales tax on that report of sale. And so she could not get past how that worked.
Okay, so were you aware that the audit was going to result in money owed?
No, not ever, no. So, again, I was in court most of this entire time that she had come back. I think she came back in June. Again, we were battling with General Motors, and so my office manager completely handled it. And I would, when I came to the dealership, because I wasn't at the dealership very often those days because I was at court all the time, and my office manager would explain to me, what she was having a problem with, and so I'd go in there and speak to her. And that's why we asked for the supervisor to come out, because I wanted somebody to straighten it out. I figured that they would, finally get it, that, what she was doing wrong, what she was not calculating right, because she couldn't make anything balance. That was the big thing, is nothing balanced for her. And so we knew she wasn't doing it right, because before, the old gentleman that had come out 4 or 5 times had, always, just, it always balanced. He never had a problem. I think maybe once or twice we had a couple $100, maybe a couple thousand that we owed. It was never off. And so this was shocking that she was so far off. And then after the business closed, again, I wasn't aware that she even had an appointment set up. She contacted my office manager, because she had my office manager's phone number, to say that she was there to finish the audit. And the business was already closed. I wasn't even aware she had an appointment. And so from that point on, she dealt with John Kendall, the trustee. So as far as reviewing the books or doing anything beyond the August timeframe, I don't know where she got her information. If she met with them, I have no idea. We weren't a part of that.
Thank you. The department, the amounts of debits to the accrual account is very substantial, very substantial. If you don't know the other side of the journal entry, where the money went, how do you know the debits are accurate or are not accurate?
Well, anytime there's a debit or a reduction to a sales tax payable account, the taxpayer should be able to explain it. The only reasonable of several possibilities is that it's a payment to the Board of Equalization for the sales tax that's due on their returns, possibly a sale of a vehicle getting reversed where it's a offsetting debit and credit for a transaction. In anticipation of this hearing, I did look to see if there's any information about the accounting system used by the taxpayer, and I was able to locate a link for the General Motors Dealer Standard Accounting Manual and Handbook. It's a 500-page document, and there's an explanation of all the accounts that are used in this system. And the account number for sales tax payable, 324, is the same that the petitioner uses. And apparently expense account 80 is identified as for rents for real estate. So that's the only reference to an account 80 in that 500-page document.
Okay, well, if another company paid the sales tax for growth, and these were backed out for some reason, which the taxpayer does not know, they are large amounts, I will give you that, but it appears like they're large amounts for a reason. There's some kind of a correction, something that was going on, and if she wasn't selling vehicles, and these were being entered as sold vehicles by some kind of accident or whatever in the accounting department, and then later reconciled. I'm trying to figure out where these courtesy deliveries were, and if another dealer had paid the taxes on the courtesy deliveries, wouldn't that satisfy the board?
There's no evidence that the courtesy.
But the board has no evidence as to where these even went. That's the problem here. You've got this huge dollar amount that under any normal circumstance, a normal auditor, any auditor, would trace back to find out if they could find out where the money went. That never happened. The dealership closed. They went in and issued these FBOs with an incomplete audit because they couldn't get back in and finish it. So there were no questions answered. And once they started mailing, they were mailing to the trustee, of which she no longer had the keys. So that's one of the big problems I have with this whole process. It's not that, the audit was slow, the auditor was an experienced auditor, but not familiar with new car dealerships because she did not go in and immediately audit like a new car dealership. She took deal jackets and did it like used cars. She couldn't reconcile anything, found nothing that way. When the taxpayer asked for a supervisor to come in, then things started going smoother, but by that time, it was months delayed. Then we have these deals that are coming out of the general journal that are huge amounts that are not traced back by the audit. And then we have the bankruptcy. And, so there's just, I question the whole audit. In entirety, because I know it wasn't done right. I know that it wasn't completed, and I know that there were other things going on with the company, and that in fact, a lot of these sales could have been, just deliveries that were calculated and the tax already paid. So this is why I have a huge problem with this 6829. And she doesn't have records. So, to continue this is like, I'm all for it if we can resolve something, but she doesn't have the records. Now, she did self-report a partial payment on 10/11, which the dollar liability is $4,650. So she did sign that, was aware she wasn't to 12/31/10 amount, I think, has all. So that's the problem, members, that I have with this at time. So I will leave it to anyone else to ask questions, but I think this is really.
Madam Chair, if I may.
Yes.
The department has far more authority than the appellant to request these records, given the concerns of Madam Chair, of the adjustments in the accrual account. And if I'm not mistaken, maybe I should ask, did the auditor trace the adjustments in the accrual account to verify the source? Verify that it was a payment, either a payment to the Board of Equalization, an adjustment for an unwind, an adjustment for a bad debt, an adjustment for a courtesy delivery simply on behalf of a California retailer, where they are the agent of the California retailer, lemon law adjustment. I mean, did the department, such that it didn't reconcile to the sales tax return, did the department do that? The auditor, rather, not the department.
I did not see a comment in the working papers to that effect.
Okay, such that the department has the ability to ask for the records from the dealer. Is it possible for the department to make the request of the, well, strike that, make the request on behalf of the board to see if they can get the records that they need in order to verify whether or not any of these adjustments were warranted?
We could try. I mean, it might be a request to the bankruptcy court at this point, but
Will be
we
months.
can look into that.
That will be months.
Let me ask a question of the appellant. Bad debts are somewhat customary to your business.
Right.
Even unwinds are customary. I don't necessarily know the average, but I'm sure that there is an industry average as to what the average unwinds are for a new car dealer. What type of cars did you sell?
Chevrolet, new Chevrolets and used vehicles. But I will say, we didn't do a lot of unwinds. We're kind of a smaller hometown dealer, so we didn't do the typical roll a car and, try to get them credit after they've gone. Pretty much, we verified everybody's information and then did delivery once we actually had credit, or whatever you want to use, not credit agency, but, that they were financed by somebody. We did not, I don't even know the term for it anymore. I've been out of the car industry for so long, but there's a term for rolling the car without having secured credit. And we did not partake in that. I mean, occasionally there was one, but it was very unusual for us.
Are all your vehicles new vehicles?
No. We had probably, well, it really depends on when we're talking, because if we're talking prior to 2008, yes. We had $3 million worth of inventory, and I would say probably 2.5 of that was new vehicles with General Motors. GMAC financed it, of course.
So the balance you would believe to be used cars?
Yeah, the balance of used cars was pretty small. Basically, we did mainly new cars. In the end, it switched a little bit, just because, again, we got cut off by GMAC with our floor line.
Any bad debts?
Yeah, because after 2008, there was a lot of bad debt, matter of fact, because we had other dealers. We were one of 8 dealers that got taken over by this one individual dealer next to me now in Dublin. And what General Motors did is they went in and terminated those dealers and then shut them down. And so subsequently, we had bad debts for all those dealers. They were liquidated and they were sold pennies on the dollar to this one dealer in Dublin.
Did the department take that under consideration?
The bad debts versus sales to other dealers?
Did you hear her testimony?
I heard something about bad debts, but I wasn't.
Well, so after
Well,
2008,
let me encourage the department to listen to the evidence as it's presented, just in case I ask.
in our particular area, General Motors dealers only, there was Chevrolet dealers, I'm just speaking because I know the numbers. There were 9 of us, and 8 of us got shut down. I was the last one because, again, I was the female, and I was protected But all the other dealers got termination letters in or before General Motors filed bankruptcy. They slowly, one by one, took us out, all through curtailments. And those dealers had to sell their inventory and had to sell their parts for pennies on the dollar to liquidate. And some of them took General Motors GMAC for millions of dollars. And so ultimately, we didn't get paid by those dealers when we traded parts, we traded vehicles. And there was a lot of that going on where if you sold to a dealer that got taken out, you didn't get paid.
Same question.
There were no disallowed bad debt deductions during the audit.
They weren't taking bad debts, so that would be, they haven't taken them on their return, and it wasn't addressed in the audit because they weren't claimed. And I'm not aware of if they were claiming them on their tax returns. They were not.
When you guys go back and take a look at this, can you reconcile the appellant's testimony as it relates to timing and see if that occurred within the audit period? And questions, that particular question could be reflected in the bankruptcy document. There are a number of documents that the agency may have access to. Did the agency reconcile the debits to the sales tax returns? Debits in the accrual account.
There did not appear to be any relationship to the amounts being removed from the accrual account to what was being reported on the tax returns. As you may have noticed, as Chairwoman Harkey mentioned, there was a lot of large deductions, and many of them were like $35,000, $100,000, $80,000, et cetera. Those kind of numbers. And the amount of tax reported on tax returns were, could be like $50,623. So there was nothing that matched up.
Again, did the department reconcile debits in the, well, let me ask the question prior to that. Did the department offset the debits to the credits in the accrual account and pick up the net? Or did the department only pick up the amount that was accrued, not offsetting the adjustments?
The department picked up the amount that was accrued.
Okay. So the department presumed that the amounts that were adjusted in the accrued account were not valid?
They were not explained. We're talking about over 3/4 of the amount accrued, of the dollars accrued in the accrual accounts were not reported.
Did the department ask for an explanation? Is there any indication in the audit that the auditor acknowledged that these debits were there, traced them to the sales tax return, at least coincide the period in time to the sales tax return, make a corresponding adjustment, and then inquiry about the other debits, such that the department has not yet to say that they impeached the records?
Well, in fact, that's what the department did, is when they took the credits in the accrual account, taxpayer was given credit for the amount of tax reported, which essentially would be debits for the amount that was reported. The difference is what's being determined in the reports, the audit reports.
Yeah, I get that. You know, what could happen in this situation is that it just could have been an error. And I'm not saying it is. Sounds to me that, first sounds to me like there's conflicting testimony between the parties that are testifying on behalf of the department, but I understand how that can happen. But if there are debits in there, in the accrual account, it's sort of incumbent upon us to at least ask for a verbal explanation or some explanation, and then at least attempt to trace it back to the working schedules of the accrual account, of the return. The net effect of that adjustment could have very well been a low taxable amount. But what you could see on the worksheet was we accrued it. There were errors that we made. These items should have been sales for resales, should have been all these other things that could have been exempt. And you see on the working papers for the tax returns, you see all that adjustment with a net sales tax liability. This sort of explains it. But if I'm understanding the department's testimony is that you just took the amount reported, gave them an adjustment for that, without reconciling it back to the records.
There was an attempt to do that, and that does get into the timing of this with the bankruptcy. There's an email on August 8th, 2011 from the auditor to taxpayer, which says, in order to understand the general journal entries in the sales tax accrual account and properly adjust the sales tax accrual account if needed, my supervisor and I would like to review more of the journal transactions made to the sales tax accrual accounts. There's several communications like that at the end of this audit prior to the communication being cut off with the conversion to Chapter 7.
She wasn't there.
Well, okay, let me do this. Understanding that this is going to come back before us, I guess, maybe not. Let me say this. I think it's incumbent upon the department to not make a conclusive statement or a conclusive position, especially after a case has been around for a while. To take those debits and do one or two things. Because I think the reliance on the records is a double-edged sword. Once the department says we are relying on these records to compute the tax liability, then unless you impeach part of those records and say we're only going to pick and choose what we're going to rely on, we're only going to rely on this aspect of the records, we're not going to rely on all these debits because they seem to be extremely high. I get not having books and records, but that is compelling to make that compelling upon the agency to seek out what those are. In the absence of books and records, then the records presented to this body, the trier of the fact, becomes testimony, which puts both the department and the appellant at an inherent disadvantage, and certainly puts us at a disadvantage now to have to determine the credibility of testimony when you've got obvious records that say that these debits exist. Let me encourage you to do what you can to kind of extend yourself, do the extra work, make the extra inquiries, try to resolve that.
Member Ma.
Thank you, Madam Chair.
Thank you. Member Ma.
Thank you. So I have a letter to Kevin Hanks from Henry Wong, Oakland District Administrator, who is in my district, dated October 10th, 2011, regarding the imposition of the 40% penalty for failure to remit tax reimbursement. And under additional background, he writes, the accounting record sales tax accrual account showed monthly tax amounts collected for the three main sales departments, new vehicle sales, used vehicle sales, and service departments. These amounts were traced to source documents such as DMV reports of sales and vehicle sales contracts for at least 6 months and verified to be valid and correct. So I'm just wondering, as we're talking about third-party verification, what type of DMV records were actually used during what period to verify that the taxpayer, actually did sell and collect the tax reimbursements?
I believe that's the report of sales that are contained in the sales jackets. The report of sales with the DMV.
And that,
Oh, okay. Okay, go ahead.
Right. For new vehicle sales, there's a sales jacket in which the documents related to the transaction are maintained together, and then included in the jacket is a DMV report of sale, identifying number, and the auditor used the information in the jacket to trace to the DMV document that's available on a standalone basis, a series of report of sale numbers, and reconciled them.
And for the quarter, and for those 2 quarters in which the accrual account was verified with the sales journal, the sales jackets, the auditor did schedule out what was contained therein, and there are report of sales numbers for all the transactions.
And those are for all the new sales?
New and used for the,
Okay.
primarily for the for third and fourth quarter of 2010.
Third and fourth quarter.
Yeah, it was partial second quarter and then all of the third and fourth
2010.
quarter sales, yeah.
So they were still making sales while they were going through the bankruptcy?
Bankruptcy was May of 2011, so this is prior to the bankruptcy.
Okay, prior. Okay. And so did those numbers, did they not trace back to the sales
They were,
tax
it
reports?
was very close. When you took the amount that was in the tax accrual account, and then you compared it to all the sales for the quarter, for instance, new cars, fourth quarter 2010, 97% of what was, of the tax accrual account amount was accounted for with the sales jackets.
So that was just for the 2 quarters that you tested?
Yeah, it's about the same for those 2 quarters, yeah. And that was the verification they did to verify that the amounts in the tax accrual accounts were accurate.
Okay. Questions I have?
If I may just follow up on Member Ma, what did you do with the 3% that didn't reconcile?
It just states amount not yet provided and scheduled, but there was no adjustment made.
Department presumed they had control over the dealer's jackets?
That the taxpayer had, or excuse me, that
No,
Groth-
the department had control over the dealer's jackets,
Yeah, yes.
and that there were no, what do you call it, when a dealer jacket is, you look at a dealer jacket and you find that it really should have rolled over to the next quarter or not. I guess that was verified. I think the member asked where the dealer jackets report of sales reconciled to the DMV report. And when did that go into effect? Was that in 2009? You guys recall? You recall when the law went into effect requiring the DMV to report and track all of their sales by dealers? We actually have a reconciliation program with DMV. I don't remember when all that went into effect.
Yeah, that's around 2011.
Okay.
That's what I thought it was.
Outside the audit period?
Right, yeah, right at the end of it, yeah.
And so did the department have the ability to reconcile the VNV report of sales to the DMV records?
I know that we have the ability to access DMV records to look up individual, and we do
Any of
provide
that-
that information
any
to
of-
field offices. I don't know that we
Any of
did it.
that done in the audit?
I don't think there was any, I don't think there was any contact with the DMV. I think it was all from the
It would be,
dealer's records. Yeah.
Any comment about observing the dealer's jacket to determine if there were unwinds, bad debts, any of that stuff?
There
Where
are
the
comments
DMV such that we didn't reconcile to the DMV report? We would have never saw that there was a difference.
There were adjustments.
I mean, the department would have never saw that.
There were adjustments made in those quarters. Some of the sales journals entries were, sales jackets were zeroed out for various reasons. And so
Can you share with us some of those reasons?
there was one that notes RC RC on file.
What is
Resale,
RC?
excuse me, resale certificate not on file, or excuse me, on file. So that was a resale, so that was a 0. There's 2 other resales. So for instance, in the third quarter 2010, 3 of there was a zeroed out on 3 of the sales agreements. So the final number that was checked against, that was 97% of the sales tax accrual count, was net of those 3 sales.
Okay. So they didn't note whether or not there was an unwind or bad debt or? I mean, the process is they would have filled out all of that information, and then the transaction could have gone bad, could have never happened. And so without reconciling that document to the DMV, we never know. I mean, I think the department is appropriately concluding or presuming that the sale was made. But under the circumstances that we have these debits, I mean, that's just another way to kind of verify if there was any of the transactions were never complete sales.
I mean, the debits, as has been noted, are in chunks of $35,000, $40,000. The sales tax amounts on an individual sale is $2,000, $4,000, $2,000, $1,000, $2,000. You know, it's not round numbers. So I guess it would have to be multiple sales that were reversed and backed out all at once, I guess.
So the department sort of presumed that they recorded a fraudulent activity. I mean, that this number was just, they actually recorded in their accrual account that we're just not going to report this, so we're going to adjust it and zero it out. And, I mean, that's kind of what you're saying.
That's why we've applied the 40% fraud penalty.
I mean, I've heard of bank robbers leaving their address, you know, so you can go find them, but they actually did that in the accrual account. I mean, you believe that? You want us to believe that?
There's no explanation for why the amounts accrued in the accrual account were not paid to the board.
Well,
And there's no,
okay, all right.
and I might add that the board never went forward to try to trace to find out where they went. And by the time they went back to complete their audit, it was with the trustee. And I understand all these things, but I don't think that the appellant was notified. I don't think that she actually knew she had liability. And I don't think she had access to the records in the end to prove anything up. So I'm having a problem with the 6829 on this. I know there were big gaps in the audit. She's had previously good audits. All the audits previous were excellent. This was a trying time for many, and things did happen. But I don't think she's a responsible person in this case. And until and unless we can come up with some kind of explanation as to where this money went, which we should have done in the audit, we should have checked to see, okay, we can't trace it here. Where did it go? Because it could any of these have been, and I'm not a new car dealer person, auditor or accountant, but could any of these have been recorded as on the DMV report? Could those have been dollars that were on the delivery bill?
We don't see any evidence of what she's described, certainly because she said, I mean, I don't think, she said, excuse me, Jagtar has stated that they received the fee and the DMV fees.
Fee and DMV fees, right.
There's no indication of why this, as we've stated, why the sales tax would have been accrued on those transactions. We
But
don't see it.
if she had registered the car, which triggers the sales tax, I mean, if you're registering a car and you're reporting it, and could that have perhaps in the DMV turned up on hers instead of, and actually have been paid by the dealer that she was delivering for? I'm just asking.
I don't, on a new car sale where it's paid directly to the board, and if she never had the tax and never paid the tax, I
But
don't,
she registered the vehicle and notified the DMV.
yeah, I mean, that's true. Again, we don't have any
See, we don't
evidence.
know, and there's a lot of stuff we don't know. We see large amounts we don't know. And so that's the problem I'm having. Member Runner.
Yeah, just a couple of quick things that would help me. One is, I need from the taxpayer timeline, indicating, because we're talking about when there was a trustee there, when you had access, when you didn't have access, and a timeline would be helpful to me. as to what those dates were, when it is that all of a sudden you couldn't get to your post office box, or that would be helpful to me, because it also then helps me then deal with the correspondence that the board would have sent out during that time, to see what matches up in regards to when things came, when things didn't come, and when you were notified or when you weren't able to be notified. So I think if you could provide that to the board, that would be helpful.
Sure. I don't know the exact date. It was I know it was a Thursday, August 23rd. There was a hearing for the bankruptcy, and they converted us. And the next day, we had all of our employees come in. Again,
I don't need it now.
Okay.
I just need I need you to really think through it now.
Okay.
And that's kind of a question I have, and that is, typically in a situation like that, where you've got a business and you've got this kind of money involved and whatnot, you had an accountant, you had a bookkeeper, you may, I don't know if you were the controller or what the process was, but there were other people engaged
Yes.
who can help provide that information.
Right, absolutely.
And do you have access to those people still?
Some of them, there are still around. I can probably contact them. I know that the primarily person that I know, there was a comment about emails going back and forth. Those emails were happening with my office manager, Mary Pfeiffer. And she is still around, but she was the primary contact.
Okay.
I kind of feel like it's being said taxpayer, like I was, involved, daily with this. I was not.
Yeah, but
I'm
again, we
not-
don't know who we
Yeah.
don't know who your agent was, so we
Right,
only
right.
refer to the taxpayer.
Yeah, no, and I understand that and can appreciate that, but I just want to say that I wasn't dealing one-on-one with this auditor on a daily basis. But yeah, we were actually closed down by the trustee on August 25th.
Right.
At that time, everybody was told to go home. We could no longer conduct business.
Right,
And the
and
trustee
again,
took over.
I assume that those, I don't know if there were other key dates around that, either prior to or right after that indicate issues in regards to access to records, when records were no longer available to you, all those issues. So if you could provide that timeline, that would be
Yeah.
helpful.
Okay.
The other thing I'm just feeling, again, that there's a lot of missing information. Of course, that's going to be our big challenge, and that is if we've got issues that we're trying to find out answers to, and the material just isn't available, it becomes a very big problem for us. And that's why, to me, the date of when we corresponded wanting the information, and when it is that then she no longer had access to that information is key to me, because if we were doing this when she did have access to the information and didn't provide it, then that's different than now all of a sudden not having access to it, and all of a sudden saying, "Oop, I can't help you because now I no longer have access." But at the time when we were asking, she did. And I just don't know the answer to that. And so that would be helpful to me. The other issue is, again, I feel like this is a complicated and issue for a lot of different reasons. And anybody make you aware of a TAP program where you could have somebody volunteer to represent you that we haven't?
No.
I would think that a taxpayer like this would benefit from that, to have somebody with them that would help them since in this kind of a situation. So at least we're going to go ahead and reach out to, let's see, we reach out to the Taxpayer Advocate's Office in that department and have them maybe get in contact with you. And these are some folks that then at least they'll take a look and see if that's something that they would want to engage in.
I'll reach out to
You'll do
them.
that? Super.
Yeah.
Because I think that would help you as you come back to us, to have somebody else kind of alongside of you dealing with that issue and looking at the materials that you're presenting, and also looking at the presented materials here. Yeah, I just don't, I think we need to take another look at this. I hope we get enough information that we can either make a decision one way or another. And I think the timeline's going to be pretty critical as I look at that. So anyhow, that's what I would want us to do.
Madam Chair?
Yes.
I agree with Member Runner that we do need some more information, and both of you and Mr. Horton asked some really good questions that I think the department should look back at their records and really answer the questions and provide supporting documentation to the questions, and see if there was some mistakes. I think at this time it would be best to continue the hearing and have it come back to us on the December calendar?
I would like to suggest it come back to us in October, and if we still need to continue it, then we can do so at that date. I don't think the taxpayer has a lot of records. I think she's testified to that. I think the department has a very sloppy audit and an incomplete audit. So unless there can be some kind of reconciliation as to where those funds went, I don't know that we're going to get a whole lot more information. I understand this is a large dollar amount, but I think, too, we don't want to just keep pushing this out. I want everybody to be on hustle to complete their file, because I think this has dragged out a lot. And I just don't think there's a lot that we're going to get back. But that being said, if the board would consent to hearing this again in October here in Sacramento, I would like to make a motion to that effect. And then if we do need to continue it again to December, we can do so.
Madam Chair, I don't think we need a motion. You can just continue it,
Yeah.
but
Okay.
let me ask a question. Did the department look at the income tax returns?
Yes.
Did the petitioner claim sales tax?
I can look.
I mean, is that in the audit? I mean, did they mention that in the audit? Is that right?
Well, there's, the returns were scheduled for 2008 and 2009. And there is a deduction for taxes and licenses, $214,653 in 2008 and $184,841 in 2009.
So this deduction is actually in their favor. I mean, to take a deduction on your income tax returns reduces your taxable income. So it would be in your best interest to try to report that correctly unless there's some kind of collusion going on. So does that number reconcile to your audit?
Well,
No. No.
It doesn't, just quickly looking at it, it's close to the amounts that were reported for 2008 and 2009. It doesn't reconcile with what was recorded as in the audit.
Mr. Renner asked about the TAP program. I thought it was customary for us to advise the taxpayer when they don't have representation that that's available to them. I don't know, is it not? I mean, the taxpayer has to find out on their own, or?
I still don't even know what it is, but if
No, I'm
there is.
Taxpayer Advocate Program, which allows you to have some legal representation.
Well, I'm asking the department.
I'm not aware that, is this something that would be referenced in the board proceedings when they send out the hearing notice contacts or anything? I'm not aware of
I
this.
tell you what,
We haven't been able to ex parte. so.
maybe the department should consider advising the taxpayer of all of their rights. I believe they do, and I believe that they're required to do so, but it appears that that may not have been the case. Typically in the closing discussion or at some point through the appeals process.
Yeah,
Did the department advise her of her rights to settlement, to go to settlement?
I think that the notice of determination, which went to the P.O. box, would include
Yeah.
those references that.
Which was
you're
never
Yes,
referring to.
and that's why that timeline is important to me, to know what it is that she was actually aware of and information that she was getting at the time. So that's why that timeline, I think, is critical for me as to when notices went.
Yeah, that one would do.
Question of the petitioner, who prepared your tax returns?
We have an independent CPA that does it. Bill Garangelli is his name.
Okay. Department believes that this independent CPA, did the department inquire of the independent CPA on the basis for the tax returns such that they didn't reconcile, or that the department presumed that he was participating in this fraudulent activity, and therefore interviewing wouldn't really yield to anything?
I did not see a record of us making an inquiry to the CPA.
Why do you just call him up and ask him?
we did not have a power of attorney, or there was not a notification from petitioner that to work through their representative, as far as the notes that I read.
Madam Chair, back to,
Yes.
Department's kind of,
I mean, we wouldn't independently contact somebody that we know is an accountant or attorney of the petitioner unless we're requested to do so.
okay. So, this is a little concerning, that the department sees a discrepancy and just assumes and doesn't even ask the taxpayer about the tax returns and ask the taxpayer for permission to see if the accountant has additional records to be able to support this. That's like standard procedure from my perspective. I mean, I did this for 20-some years, and I mean, I was district reviewer for a while. And when I reviewed an audit, if they said, well, we never consulted with the accountant, and you've got an FBO and lack of records, we made no effort to attempt to find these records or to trace these records back to the income tax returns. However, we relied on the income tax returns to impeach the records. That just seems to be a little unfair, guys. I mean, I'm not getting into the 6829, but I am concerned about the equity of this process, and I'm very hopeful that what you're testifying here is not true, and that the truth is that the auditor did do this work, and that the auditor did have these conversations, and that's reflected somewhere. But based on the evidence we've got here, that's very concerning. I mean, we can't come to a conclusive statement, this taxpayer is guilty, so therefore we're not going to do anything to substantiate these discrepancies. That is within our power to do, within our power, within our authority, and one would even go as far to say that we have a fiduciary responsibility to do that.
Okay, I just want to announce that there's a $20,000 limit for TAP program, so that's why
What's it, you mean the?
it's a $20,000 liability limit for TAP. That's what the information I'm getting from my counsel here.
Yeah.
yes, it is. But I think it's still worth the petitioner reaching out, or TAP reaching out to her. They can
Yeah,
still provide some assistance, and that's what I wanted to at least
Is that their-
provide.
I don't know if that is
phone
their
number.
guideline or what that is.
Yeah, they
so.
might, yeah, I think, because they have, there are, even if they can't represent her before the board, they can still help her
Yeah.
go through this process, and.
Yeah.
Okay.
So I do want to provide the phone number. I have it here for you.
Right.
Jeff has,
think-
St. Julius has it for you, so that'd be great.
Thank you.
The members, the taxpayers' Bill of Rights could have been of some assistance in providing some guidance on this. In hindsight, let me just encourage the agency to either document their activity relative to the taxpayers' rights to make sure that you kind of check them all off. Taxpayers fully advised as what her 6829 means. And to the extent that you can reconcile this to the DMV records at this particular point in time, let's do so. And if the agency is relying on the examination of the auditor, the 3% difference in their reconciliation, such a minor difference, at a minimum, they could have, it's not a material amount, but materiality is subjective. I can't really make that call. That's actually the petitioner's call as it relates to materiality. So even adjusting that to some degree, not just assuming that entire amount is an error, when in fact you know that it's not. You know that there are resales involved. You know that there are other items involved. So the amount that you're unable to trace.
Okay, I would like to just add that I believe the taxpayer probably needs to have her tax returns, everything else that she can probably gather during this time period. And are you going to meet with the taxpayer? What are you going to do? Because you're under ex parte like we are. So how is this going to proceed?
Well, they can continue to meet with the taxpayer.
Okay, Henry, or Mr. Nanjo.
Yeah, no problem. Madam Chair, as the department, they can meet with the taxpayer and continue to have meetings to try to work that out. It's you, as the board members, decision makers, that are restricted by the ex parte communication rules.
Okay, then let me encourage the department to get as much information as you can to try to figure out where this money is that you said she's committed fraud with went, if you can, to look at the tax returns, to do whatever it is that you can do at this point. I don't think you have a 6829, and I would deny it right now. The board is not comfortable with doing that. They still think there's some stuff to be had. I think that it was a poor audit. It was not completed. I don't believe the tax member had access to the information, and I can tell by timelines that Mr. Runner is asking for, and her comment that it was August 25th, that when the notices were mailed, she did not have access to that. So I think there's a lot going on here that, in your wisdom, I hope you'll either confirm or eliminate. And so we will see everybody back in October.
Well, just one follow-up question to petitioner. Do you have your bank records?
For the dealership, no. We don't.
She doesn't have any records.
I have no records. The accounting firm came in the following Monday. We were shut down Friday, and the accounting firm came in Monday and took everything.
She has no records, which
I
is
have
the
no-
problem with all.
The only thing that was left was the car deals, but those subsequently, after my last hearing, which, again, I don't even know what year it was, I went back to the business because there's another business in there, and I know the file cabinets were still in there, but they said somebody had come in and destroyed them, because there was a lot of personal information.
Has
you know.
the bankruptcy, that's been concluded?
Yeah, I think 2 years ago.
Does the department have, the records were submitted in the bankruptcy process, right?
And
I'm presuming.
She wasn't the
Department,
trustee.
even Madam Chair.
She
in the-
wasn't the trustee, so.
I know, but in the bankruptcy process, don't they submit records in that process?
There were some report, particularly when they were under Chapter 11 and they were debtor in possession, there were reports made from Groth to the bankruptcy.
Did the department gain access to those?
We have some of those.
Under Chapter 11?
We have some of those records, yes.
Did you look at those records relative to sales activities?
Yep. And
What did it tell you?
reported in May, June, May, June, and July of 2011, they reported cash received for sales of over $300,000.
How'd that
Close to
compare to the
$300,000.
audit?
It's sufficient to cover the tax recorded in the audit.
No, I mean, how did that compare to the audited taxable sales?
Well, it was just all cash received for all sales, taxable and otherwise. So it's,
Again, how did that, I mean, the department seems to have enough money, that too, but enough information to be able, based on their information, to differentiate taxable and non-taxable. So given that, did the department take a look at how what the bankruptcy, they don't have control. They're under Chapter 11, so those records are pretty good. They may be an adjustment factor because of their decline in business, but the customers don't know that.
So there were no gross sales reported during those periods because there was no returns filed for those periods. When you convert the taxable sales to measure for those last few periods, the amounts of total sales reported by the taxpayer to the bankruptcy court are consistent with those numbers. They were reporting, like I said, over
Okay,
$300,000.
but my question is, are they consistent with the audit liability?
Yes. They're consistent with the recorded measure, converted to measure, that was used as the basis for the audit liability.
See, I want to see all this.
Yeah.
I want to see it all,
Can you make that available
because we
Okay.
can't find it.
to me as well?
I want to see everything. I want to see how you're tying this audit together. I want to go through the entire audit and understand it, and then figure out how you build. I want to know what was verified, what was not verified. I want to see everything you've got, paper, line item, Excel spreadsheet, however you tied this together, because that's what I'll need to see before it comes back in October.
Yeah, because it really should not have reconciled. I mean, under the circumstances, that number should have been a lot lower. Just the innate circumstances of being in Chapter 11 and all the other challenges that they have. And it doesn't sound like that's in, from my read of the audit, it's not really in the audit report. And I don't want to say that you guys are just responding, but take a look at it. You know, take a look at all these factors. And I mean, I appreciate not having books and records and not being available to you. I appreciate that. But that should not be the brick wall. Departments should do everything they can to sort of climb over that and get at the truth.
Especially if the liability is $4 million. That's a huge one.
All right, well,
Okay?
That's it, ma'am.
So we will, what do we call? Recess this meeting, or what are we doing?
continue it.
Continuing this meeting in October, and will somebody from the department explain to Ms. Groth-Hill what date, what time, potential?
We're meeting October 24th through the 26th.
Will you send her a notice, board proceedings?
Yes.
Yeah,
So it'll be all those days or just between those days?
between those
Okay.
days. So if there's a day that works out better for you, please
Yeah.
select.
We have a correct address?
Pardon me?
We have your most recent address?
Yeah, everything's been coming to my house for, I think, since the last hearing. We got my home address, and it's still my home address.
Okay, thank you.
Okay, thank you.
Hey, members, thank you for your time and attention to that issue. That was a biggie. All righty. Next item, Ms. Richmond.
Our next item is C13, Jagtar, Singh, Kandola. Please come forward.
Mr. Anjija, please introduce the items of this appeal.
Madam Chair and members, the appeal before you involves two unresolved issues, which are whether petitioner is personally liable as a responsible person for the unpaid liabilities of K&W Slocum pursuant to Section 6829, and second, whether relief of the penalties assessed against Slocum and included in petitioner's liability is warranted.
Thank you. Mr. Kandola?
Thank you.
Welcome to the Board of Equalization. You will have 10 minutes to present your case, then we'll go to the department, who will take 10 minutes to present their case, then we'll come back to you for a 5-minute rebuttal. So please announce yourself or introduce yourself for the record, and then you may begin.
Thank you. My name is Jagtar Kandola, members of the board and Madam Chair. I will try to summarize a series of events that led to the sales and use tax on liability and penalties and interest assessed to me personally. Back in 2009, my good friend, Mr. Joe Whitron, who was trying to purchase a restaurant, and he didn't have restaurant experience, so he approached me and offered me 10% interest in the business, in his company, so he could secure a lease and line of credit with the purveyors because of my experience in restaurant business from the past. In October of 2009, we purchased the restaurant, and I was responsible for the financials, and I paid all of the bills, including sales tax, payroll taxes, everything was current. Because of the recession, the business was losing money, and in the beginning of 2010, in January, I offered, I suggested basically to shut the business down and cut our losses, his losses. And, he wanted to tough it out and hoping the sales will, improve. But I decided to walk away and relinquish my 10% in the company And I asked him to update all of the filing with Secretary of State, BOE, IRS, purveyors, and he asked for my help with, clerical functions occasionally, a couple of times a week, if I could just pay the bills, help him out. He don't have any clerical staff, a bookkeeper. And I kept, the signature authority, because he was not always present, he wanted me to keep that so I could pay some of the bills on his behalf for a couple of months. He was a friend. I offered to help, and a couple of months went, 3 months, 4 months. He wasn't interested in hiring somebody because the business simply wasn't able to, he wasn't able to pay his bills. And so I finally found out, I think it was September or October of 2010, that he ignored to update any filing. So I took it upon myself to update the Statement of Information with the Secretary of State, IRS, and I suspended personal guarantees from all of the purveyors. Because of my signature authority, and yes, I did write the checks on his behalf, he used to pull the invoices and the bills and leave it for me to pay them. And, he simply didn't have enough money to keep all the bills current, the sales tax, the payroll taxes, he was behind. I had no control. I was simply an unpaid helper. So in the year 2009, when we took over in October, and I earned basically $9,000, $3,000 a month. And out of that, $7,500 were reported on my tax returns for year 2009. And $1,500 of that, $9,000, was reported on returns for year 2010, which was earned in the last 2 weeks of December 2009, just like all the other employees. Checks were printed on January 5th of 2010. The department made a position that I was a paid officer because of that $1,500 compensation during the year 2010, and they're using that, compensation to make me responsible for the entire liability for the first 3 quarters of 2010, and penalties and interest. I had a 10% interest to start, which I relinquished. I didn't get paid a single penny in 2010, and my tax return showed that. I believe the department has a copy of that. I felt it was a little unfair to assess the 100% penalty and a liability to me. I believe my ex-friend and the owner of the company skipped town, nowhere to be found. I feel that I made $9,000, and now the liability and penalties are in excess of $62,000. Thought it was unfair. So I went to appeals. They maintain the same position as the department. So here I am asking for your assistance. At the maximum, I believe that I should be penalized with no more than 10%, since I started with 10% interest in the company. So that's my position, and
Senate, you'll have a time to respond, so we'll go to the department now if you're finished.
I'm finished for now. Yeah.
Okay, and and listen to what the department says. You may want to take some notes so that you can respond. Thank you. The department, please introduce yourselves.
Thank you. Good morning again, Chairwoman Harkey. Members of the board, I'm Scott Claremont. With me are Stephen Smith and Dario Romano from the California Department of Tax and Fee Administration. We concur with the recommendation of the Appeals Bureau that petitioner is liable for under Section 6829 for the unpaid liabilities of K and W Slocum House. The liabilities arise from self-assessed, partial, and non-remittance sales and use tax returns signed by the petitioner for the fourth quarter of 2009 through the third quarter of 2010. Under Section 6829, a person responsible for sales and use tax matter is liable for the tax, interest, and penalties of a terminated corporation if the person willfully failed to pay the taxes. Here, there's no dispute as to the first two elements, that the business terminated and that tax reimbursement was collected. With regard to responsibility, petitioner was listed as Slocum's chief financial officer in his 2009 seller's permit application, and he sent a letter to the department dated April 27th, 2010, in which he stated, quote, "My partner Joe Wittrin and I make financial decisions for this establishment. Mr. Wittrin is the president of the company, and I am the chief financial officer," end quote. Petitioner signed all of the returns at issue, including the last one on October 28th, 2010. The department's automated records show at least 15 instances when petitioner discussed outstanding liabilities and other sales and use tax matters from March 2010 to as late as December 9th, 2010. In fact, until December 24th, 2010, petitioner was the only person the department had contact with regard to those liabilities, on which date Mr. Wittrin contacted the board and stated that the petitioner had left the company. Petitioner also represented Slocum with third parties throughout the period. For example, as late as December 15th, he signed a check to PG&E. Finally, after this period ended, in a letter to the department dated August 1st, 2011, he confirmed that he transferred his interest in the company in December of 2010. In sum, petitioner was a responsible person throughout the period at issue. A failure to pay is willful if the person had knowledge that the taxes were not being paid, had the authority and ability to pay the taxes, and failed to do so. Here, the knowledge is evidenced by his signing of the returns and his discussions with the department regarding those outstanding liabilities during the period. His authority to pay the taxes is evidenced by his signing numerous checks on behalf of the business, again as late as December 15th, 2010, and including a check to the BOE for a portion of this liability period on September 25th, 2010. There's also petitioner's statement in writing that he made the financial decisions for Slocum, which was done in April of 2010, and his numerous contacts with staff in which he negotiated the payment arrangements. Finally, Slocum collected the reimbursement at issue and reported over $1.1 million in sales during this period, and another $228,000 in sales in the subsequent quarter, the fourth quarter of 2010. It paid its employees over $550,000 during this period and continued to make payments to its landlord, utility companies, and vendors through the first quarter of 2011. Thus, there were sufficient funds available on and after the dates the taxes came due. In sum, all the elements are met for petitioner to be held personally liable for the liabilities under Section 6829, and we concur with the recommendation of the Appeals Division. Thank you.
Mr. Kandola, you have 5 minutes to respond.
Thank you. And I have, the tax returns and some of the bills that, department mentioned, I'm not questioning any of those. I've already stated that, yes, I kept my friend, Mr. Wittrin, did ask me to keep the signature authority to help him out. He was never there during the day, so he just used to leave a list of invoices and bills that he wanted me to pay on his behalf. I did that. That was strictly his decision which bills to pay. Toward the end of the year, I believe August or September, October, he was put on a notice from purveyors. He was falling behind to pay in cash. I have the checks ready, cash to receive deliveries. Otherwise, he wasn't going to get any. He was behind on rent payments. PG&E was ready to shut down because, the payments were behind. So there were some bills paid to keep the doors open. And finally, he decided to shut it down. The economy, hit hard in a lot of businesses. This was no, different. And I don't have any financials to question the accuracy of, any records or, the quarterlies, returns or all the other, the documents, because he took all the financials with him. But I've already mentioned that, yes, I did write the checks, and that was not because I was responsible. I chose to write, certain checks and not the others, in particularly, the payroll and sales taxes. But that's what I was instructed to do. I only went in a couple of times a week to help him out, and I did what I was asked to do.
Thank you. Member Runner.
Help was some of the key phrasing you had just talked about was you were instructed to do. At what point did you not have the ability to pay bills that you chose to pay?
December 31st of 2009 is when I decided to walk away.
December 2009.
2009. And during that first 3 months when I was involved in a business, in a daily operation, all of the bills, the taxes, everything was current, and yet the business was not making enough money. It was not profitable, and we kept the doors open. We didn't make enough money.
Okay, let me go back.
Yes.
So in 2009, how did you communicate your relinquishing of the business?
Verbally, we had a meeting with he was the 90%, partner in the corporation, president and the owner. Verbally, he was a good friend, and he asked me to help him out until he finds somebody, and I offered.
So the only thing you had was a verbal conversation?
Correct.
No memo, no email, no anything that communicated that?
Wish I had. I should have done it,
So that was in December 2009.
Correct.
But then you continued to go ahead and write checks because he asked you to do that.
Correct.
Did he bring you the bills? How did you decide what to?
I used to go in during the day a couple of times a week. He was there in the evening every day, and he will just leave the list of the bills he wanted paid to keep the doors open. And so that's all I did.
And at least, let me go back to the department. What communication did we have with this individual then after December 2000, well, in 2010? What communication did we hear back from this individual?
2009 or
2010? In 2010.
In 2010?
Yeah.
Again, we have a letter from the individual in April 2010 in which he states that he made the financial decisions for the establishment along with Mr. Wittrin. That's in April. That's April 27th.
What was the nature of that letter? What was he? Somebody just writes us a letter and say, "Hey, I'm the guy." That sounds a little strange.
That's what it looks like.
Look at me.
It's, you can make copies.
That's okay. No, it's just a piece of correspondence that came in, or?
Yeah, and I'm not 100% sure the nature of
Why,
but it's one sentence long. So.
Okay. So that's one piece. Then other conversations.
And then our ACMS records, which are related to collections of liabilities, don't start until March of 2010, and it's between March and December in which there are approximately 15 conversations that are noted in our records between the petitioner and staff discussing specific outstanding liabilities. and those go through December 9th.
When you say discussing, was there any indication that this individual had control over paying that? Or they were just saying, hey, by the way,
No, there were, oh, sorry.
I was going to say, are they just statements from staff saying we informed them that they owed?
It is a back and forth, and there's certainly entries in which essentially there's, I guess you could classify as a negotiation. Is $3,000 a month. Can you do that? No, I can't do that. There's no indication that there's any sort of authority that needed to be given during that negotiation.
He negotiated like he had control.
Like he had the control to determine how much could be paid on a monthly basis.
Okay. So what, I guess the question to you then is, first, that letter that was sent, the purpose of that letter, and it seems to indicate something different than at least what you thought you were wanting to say in December. And then the conversations then that you made you aware of the liability during that period of time and negotiating the liability at that time.
I believe it's been almost 7 years, or almost 8 years now, because the first quarter of 2010, I think the quarterly returns were filed, but the tax was not paid. So there were calls coming in, and of course I used to be there during the day and answer, a couple of times, the phone. And I was basically asked by the department about who is responsible, for the payments, or who makes the decisions and the payment plans to catch up. And so I didn't just, till I don't remember the individual's name from the department. I consulted, the owner, asked them what needs to be done, what he can afford, and so he, at the time, I believe, what department is saying $3,000. I'm not sure about that because I don't have any records going back that far long. And as far as the letter, I was basically a CFO with just the title, with no responsibilities and no authority. So because he wanted me to pay the bills on his behalf, he basically just wrote the letter and him sign it, have me sign it, so I can continue signing checks on his behalf. I believe that was the intention of the letter. And as far as the payments, and there were some payments made to catch up. I'm not sure all of the payments were made, for the back sales taxes, but there was most that I believe in the first quarter was paid. I believe sometimes at the end of second or the beginning of the third quarter.
Yeah. Let me go back to the department. What kind of attempts have we made to try to make contact with the other individual?
The other individual was also dualed as a responsible person, and he didn't file. He didn't respond.
He's in the wind.
So the liability's gone final. The liability is final as to the other individual.
Okay, I'm sorry for you. I think got played in a.
Right. I mean, like I mentioned before, maybe that was his intention all along. And as soon as the business shut down and he skipped town and stopped all communication with everybody involved, including me, emails, telephones, everything was discontinued, and I still live in the same place, so it was easy to find. So here I am after 3 or 4 years of negotiation, and was held responsible for the full 100% of the penalties and interest and liability.
Okay, thank you.
I have a question, if other members. Okay, for the department, I have noted here that in Mr. Kandola's original petition for redetermination, It was requested that the department recalculate the assessed liability, indicating that proceeds from the sale of its liquor license and some payments made were not credited to the outstanding liability. The petitioner makes reference to specific amounts in this regard. This issue is not addressed in the hearing summary. Do you know what happened with those?
I believe that was addressed in the hearing materials, if not in the summary, then in the decision or recommendation. And I believe
You
those
could
were
point
taken.
that out to me.
Let's see. I might have to find that. Oh, excuse me, it's in the summary, Sales and Use Tax Department summary. There were two payments regarding the liquor license referenced in the petition. They were applied to the tax due for the first quarter of 2011 in accordance with payment application rules, and $8,800 and another approximately $9,000 was applied to the fourth quarter of 2010 in accordance with payment application rules. And, this liability does not include those periods, but that was according to the application rules.
Okay, so fourth quarter 2010, and this ends as of 9/30/10.
Third quarter, correct.
Just a question, why wouldn't those be applied to the outstanding liability? Fourth quarter 2010, or third quarter 2010, if that's when we cut it off, why would we apply it to 4Q?
Yeah.
You don't know?
Well, the payment application rules, and what I'm pulling it up right now is it goes to as directed first by the taxpayer. If not directed, then it goes to.
However you choose.
No, there is specific.
Okay.
It's a specific, and I'm going to
You're going to look it up, thank you.
look it up.
The taxpayer can choose where to apply it.
If they initially choose where to apply it, then that's where it would go. After that, then there's a set of rules that it follows.
I know I was not given that opportunity, and I had no knowledge when the liquor license was sold, and how I did question when I found out the proceeds from the liquor license were, credited against 2011 and fourth quarter 2010, I did question that, so I was given a very vague answer. That is a department policy to assess that, credit that, those proceeds to the recent liability instead of the oldest liability in question.
I'm reading here quickly to find out what those amounts were. I have this letter, but I'm not, can you tell me what those amounts were?
Yeah, I just have it.
The amounts, the two payments that were applied in 1Q of 11 and the 4Q 2010 $9,000 payment.
The 1Q11, the payment was $3,363, and 4Q10, the payment was $8,894.57.
Okay. Members, I'm going to make a motion.
I have a question before you do.
Oh, okay, go ahead.
Okay, I'm trying to figure out if he had liability, if we, I guess the first question is, can we make a decision in regards to applying those to the earlier debt, earlier payment, or earlier time frame?
Yes, we can.
I thought it was for the department. I'm happy to answer that question.
Okay.
So first of all, this was proceeds from the sale of a liquor license
Right.
that belonged to the corporation, so the taxpayer that made that payment was not this individual.
That's correct.
It got applied first according to however that taxpayer may have directed it, and then if not, it
That
goes
taxpayer was in the wind at the time.
corporation, right.
Right.
And then the board has adopted, I don't know if it's the CPPM or what, but the board has adopted in the audit manual a list of priorities for how it then gets paid, which is usually to the benefit of that taxpayer.
Right.
And then, these were applied in 2010, you've got the expiration of all applicable statutes of limitations. So that money, once applied, cannot be redirected because there's not a possibility of a timely claim for refund. Once it's applied, it's stuck, and it was applied for the benefit of the corporation who actually made the payment. We've seen this in a 6829 where the individual would love to redirect it from a period that's not on their hook to a
Right.
period that is on
Right,
their
right,
hook.
right.
But because it's been applied, paid, and the statute of limitations has expired, and it's not a claim for refund on behalf of the taxpayer because this taxpayer didn't pay it, the board has no authority under the law to reapply it.
Good job, Jeff. Should have came from the department, but
Well, yeah, I could, yeah. What about the late payment penalty?
That can be relieved based on reasonable cause if the trier of fact finds reasonable cause to relieve it. Again, the reasonable cause you would be finding is on behalf of why the corporation failed to pay and had a good reason, as opposed to an individual saying they're not responsible and not liable. But that's a question of fact for the trier of fact.
I think because this is a 6829, there's a little bit more reasonableness that can be exercised in that it's kind of finding out about this after the fact and after the funds have been redirected. And and after he's been left holding the bag, because we can't find the other guy, and he's got a 10% interest. So even though it was to the benefit, they were applied to the benefit of the other taxpayer, I don't think the other taxpayer cared at that point. So I think we just arbitrarily followed the rule and applied it where we saw fit. This gentleman certainly probably would have directed it towards the liability that he thought he was going to be assessed. So if we can't redirect it, it's $12,000, I think, which is a substantial sum. A penalty is $7,000, thereabouts. I think, yes,
Before, are you going to make a motion?
I could.
Can you wait, please?
Sure, go ahead.
I just have a question to the department. You did find one person responsible in 2014. When did you start seeking to have the petitioner responsible?
I think the examination was done simultaneously.
14.
Okay. I was just looking at the interest as well.
Okay. I would love to reapply those payments, or to reduce the debt by those payments, but I don't know if I have support to do so, because I think they could have been, should have been probably directed to the liability at hand. Member Horton.
question of Mr. Njija. Given that the petitioner didn't have control over the allocation of the $12,000, which could have relieved the debt, if he did have control over that, would the petitioner be responsible for that amount not being paid to the board?
So, no, because you're looking at 6829, which is a liability that accrues
Prior.
when the tax was incurred, and you're talking about collection activity and payments after the fact.
That's what I thought. All right.
Okay, does anybody see any avenues up here? Okay, I will, I'd like to entertain a motion at this point. Runner,
Well, it's just odd that, again, it's so odd because we find him liable for the tax. That was the case. He was making payments. But then all of a sudden, there was some asset that he didn't have control over that could have benefited him.
That's what I'm saying. It sounds cruel and unusual. The law is, I don't think he understood that he had control or could have had control. They went to the other guy probably was out of
Well, he
there.
never really could have had control, I think.
Right, I think that's the point, too.
I mean,
I didn't have a control, that's correct.
he basically got hoodwinked into becoming a partner with 10% and didn't have any control over the corporation?
I did not, no.
Madam Chair.
Yes.
No, I'm just listening, just.
This is just one of these things. I don't like these cases either. They're just like, they're nasty.
Well, I'm going to go, somebody come get me, I guess, if they don't like this. I'm going to make a motion that we give credit for the amount of the amount of money that was there for that license of the sale of the license of the liquor license against the liability, and also to waive the late payment penalty.
Okay, so will that be the $3,363 and the $8,89457?
Yes.
So the total amount would be $12,257.57, I believe. So,
And waive the late penalty.
and waive the late
To
penalty.
that motion, before there's a
I
second.
will second, and that, now you can have a conversation.
I'm just tad bit concerned about our exposure, such that,
By who?
yeah, that's the question, is where's the corporation? And the corporation had, did you have any authority with the corporation?
In the beginning, when the corporation was established,
Let me restate that. I'm sorry, members, we got to reopen if I can ask these questions, but let me just talk. The concern is that if our presumption is that, well,
I guess, would he have liability for the corporation after the fact?
no,
Transferring it?
we're basically taking someone else's money and redirecting someone else's money.
No, that wasn't my motion. My motion was just to give the credit for the amount, equal amount. Had nothing to do with moving the amount, taking that amount. It just happened to be the same amount.
Oh, so your finding is that the liability at the time should be proportionately reduced
By that amount.
Right.
by that amount.
I'm not moving any money around from that sale.
As it relates to this taxpayer,
Yes.
such that the taxpayer had no authority no control over the payment of that particular tax during that period of time in which the liability was established.
Right,
That's your motion?
that's his motion. I'm glad you clarified that.
All right. And that's based on his testimony to that effect?
No, it's based on the department stating that they applied the funds. The funds came in and they
I
applied the
don't
funds.
necessarily, well,
But also, Madam Chair.
Yes.
He's also testifying that he didn't really have control, even during this time period.
during the audit period.
Yeah,
Right.
the period that he's been held responsible for. He was just, yes, he did, yeah. He was writing checks as directed from the 90% owner.
I think he had some knowledge, and I think he admits in letters and things that he was writing the checks, and I think he understood that the company was going down. What I don't think is that he had any control over the $12,000 that did not go to this credit. I think he got stuck holding the bag. And so I'd like to minimize this, but I think under 6829, he kind of is the responsible person, but I just think the amount is kind of skewed against him. That's where I'm falling on this.
Basically.
Maybe,
basically,
maybe if the
motion
motion was to waive the interest
Waive-
from the period in which the $12,000 was available, and that an action was taken on the part of the corporation that caused the petitioner to be harmed. He had no control over that. Let me think about that.
Well, I mean, basically, I mean, it's just an amount of money. So it seems to me the issue is that the intent of my motion is that he just isn't liable for that. He's not liable for the whole 17,000. He's only liable, he was only liable for whatever that's going to net out to be.
I got it. It's a good motion if that's the findings of the trier of fact.
It would come out, it would basically come out to tax of 18,617, or 18,000, no, excuse me, tax would be more than that, because that include the penalty, excuse me. It'd become about 25,000 in tax.
And
We could, or we could make an alternate motion that is just not responsible for 2010. I don't know what that does, but
See what?
I mean, I'd be more comfortable, crediting the liquor license since, he,
dollar amounts.
the dollar amount for the liquor license, because that should have been credited to him had he been the controlling member and actually doing everything right. But the fact that, this other person skipped town and got paid, did he get paid the liquor license?
It went to us. I mean, it was applied to it went to the board.
Oh, okay, it went for the board
Yeah.
to satisfy who's this obligation?
Subsequent obligations, which the other person is responsible for,
yeah, that he's not responsible.
but he's not, because he left prior to the business closing.
Oh, so you are pursuing
There's
the
already-
other gentleman too?
There's a final liability as to that other gentleman. He never contested the liability.
And at the end of the day, it's just, again, the motion is simply to lower the
Members,
liability by that amount,
I don't-
unattached to the fact that it was about the sale of a liquor license.
I don't know, based on the testimony that of the petitioner, he doesn't seem to have a whole lot of control over this stuff. I mean, even though he's in a position, he's making payments, I don't know if he was doing this under duress and being forced to do this, and if he's a responsible party at all, I mean, it just seems to me that he appears to be an honest party.
I'm open to a substitute motion.
That is, that is compliant with the law. If he had some rights and control over the decision-making process, he would have complied with it. I mean, his presence here seems to indicate his willingness to comply with the law if he had those rights.
Thank you, sir.
Well, his testimony actually said that he was directed what to pay.
Yeah, under duress, I don't see that he's willfully, from his testimony, that he's willfully.
You got a substitute motion?
I'll entertain a substitute motion.
Can I ask a question?
You may.
So I didn't realize that you guys were billing this.
You can't
of
ask a
appeals.
question out here.
She can ask appeals.
You can ask.
Okay, to appeals. I didn't realize that they were also billing Mr. Whittam, what's his name? Whitram?
Okay.
So after 2010? So why can't we assess this portion to him as well? Because normally under these type of cases, you can't find anyone else. So the person sitting here is like the last man standing, basically. But since you are going after issuing him the bill, Whitram is the 90% owner.
My understanding is his liability covers this as well, because that gentleman is responsible
one.
for the
They do
entire
both.
liability
What?
They do them both.
So you allocated, what, 90%,
They don't allocate.
10%?
Everybody who's
100% both.
responsible is on the hook for the corporation's liability, except in this case, because they determined that he was not responsible after third quarter of 2010, his liability stops at that point. The other gentleman is on the hook for the entire amount of the corporate liability.
So they-
Yeah, and if it's.
So there's overlap, but we only collect it once.
So if this
If
So you're trying to collect it from both of them?
That's, I don't know the success or failure of that. It's a final determination, which means it's collectible, and the department can engage in collection activity against the other gentleman.
But are you trying, is the department collecting for this portion too?
Yes.
Yeah,
one.
it's all on the,
So-
They do both of them. And if one pays, then the liability gets reduced and, yeah, that's the way it works.
So we should still go after that other guy.
We can still go after the other guy. Okay, I'm going to make a substitute motion.
Go after the other guy.
A substitute motion would be to grant for Mr. Kandola, grant for the taxpayer,
That he was not liable.
that he's not liable under 6829.
Second.
I have a motion and a second on a substitute.
I mean, based on his testimony that he was not responsible, didn't have control, minority interest, paid these payments under direction, duress, I'd be supportive of that.
Okay, is there any objection? No, such will be the order. Thank you.
Thank you.
You're welcome. Phew, I don't like those cases either. They're hard. Okay, now, next item.
Our last hearing for today is item D, Special Taxes Appeals Hearings, item D1. James R. Kidder, please come forward.
Scott, is this yours?
It gives some joy, though. Mr. Anjija, please introduce the items of this appeal.
Madam Chair and members, the appeal before you involves one unresolved issue, which is whether petitioner is liable for the underground storage tank maintenance fees.
Thank you. Are you Mr. Kimsey?
I am Mr. Kimsey, yes.
Mr. Kimsey, welcome to the State Board of Equalization.
Thank
You
you.
will have 10 minutes to make your case. The department will have 10 minutes, and then you'll have 5 minutes on rebuttal. Please state your name for the record, and you may begin.
Thank you, Madam Chair. Other board members, good morning. It's been a long morning so far. This situation is where Mr. Kidder is the owner/lessor of a underground storage tank, and the lessee of the tank was using it in their gas station operation. The lessee had been reporting the underground storage tax fee for a period of time, and then they stopped reporting and then abandoned the business. Subsequently, Mr. Kidder was assessed the underground storage tax fee for the unreported periods of time. We're not disputing the amount of the fee that was assessed because we're taking the word of the fuel distributor on how many gallons were sold to the lessee. But we also acknowledge that under the law presently, Mr. Kidder would be liable for the tax as the tank owner. What's troubling to us is the way the law was written, and hopefully our presentation today will shed some light on the problems with the law, and if they're not already known by the board and the staff, they might be. But we believe that the way the underground storage tank fee law is written makes it very illogical and difficult, if not impossible, for tank owners who are a lessor to comply with, because in the situation of a tank owner and a lessee, the law requires that the tank owner and not the lessee file the returns and pay the tax, which is based on a number of gallons of fuel that's put into the tank. And remember, the purchase of the fuel is made by the lessee, not the tank owner. So in these cases, the tank owner has no direct knowledge of how much fuel is put into the tank. And therefore, how are they supposed to report the tax if they don't know how many gallons are being put into the tank by the lessee? I guess maybe the tank owner could go to the fuel distributor and ask them for the number of gallons purchased by the lessee, but the fuel distributor is under no obligation to give out that information, either legally or otherwise. So they can't get that information from the fuel distributor. The law provides that, and this was recognized when the law was created, the law provides that the board could give out otherwise confidential information to a tank owner in order to report the tax. Problem is that that information, that accurate information that they need, is not available at the time the return is due. And this has been the case forever, and as far as I can see, nothing has been done to correct that problem. Let me give you an example. If a tank owner they have to file a second quarter return, which is due on July 25th, but they don't know how much fuel was put into the tank. So they contact BOE to get that information for April, May, and June. BOE gets that information, as far as I understand it, from the fuel distributor's SG returns, where they're pre-collecting the sales tax on the gallons that they sell. Those returns are filed on a monthly basis. They're due the end of the following month, or the end of the month following the month that is being reported. So if our tank owner is looking for gallonage numbers for April, May, and June, they could probably get the April numbers, because April SG return would have been due on June, on May 30th, May 31st. But the information for May and June probably isn't in the board system yet. And that's because the May return, which was due on June 30th, may not be in the system yet. But the June return, the June numbers, which are due July 31st, that's after the due date of our tank owner's return that has to be filed. So how is a tank owner supposed to get accurate information? It's impossible, as far as I can see, unless they can find, in this case, find the lessee, and the lessee was to give them that information. But in this case, the lessee was long gone, abandoned the business, can't find him. So in this situation, it's pretty obvious that the lessor is prevented from filing an accurate and timely return under the law, because they have no way of obtaining the accurate information related to the gallons to file on the return. We feel that the law as it is now puts an undue burden on taxpayers identified as lessors and is discriminatory towards the lessors because they do not have access to the information required to file an accurate and timely return. And they're put at a distinct disadvantage compared to taxpayers that do have access, like a lessee. I mean, under the law right now, I don't see how it makes any sense
to require the owner of a tank to have to pay a fee that's based on the amount of fuel that's purchased by somebody else. We're taxing somebody who doesn't buy anything, but we're taxing him on a commodity that's bought by a third party, somebody else. Just doesn't make any sense. Now, one of the other things that we're questioning, or we are seeking reduction in this liability, is we had requested that the penalties for failure to file be deleted. And also, I believe we requested
Speak
that
into
the
the
collection
microphone.
fees be deleted.
Speak into the microphone, please.
We had requested that the failure to file fees be deleted, and also the collection fees be deleted from the liability. And I don't think I've ever seen a resolution to that. So that was another second item that we're questioning. And that's basically the gist of our argument here. It's just, I don't see that anything's been done to clear up this problem with getting information to a lessor to file a return. Every other law that the board administers didn't seem to have that problem. Just this one.
Okay, to the department, please introduce yourselves. You have 10 minutes.
Good afternoon, Madam Chair, members of the board. My name is Joseph Bonnewell with the Legal Division of the California Department of Tax and Fee Administration. With me today is Stephen Smith and Damian Armitage representing CDTFA. Members, our position today is that the petitions for redetermination before you should be denied because, as we just heard, there is no dispute that the petitioner was the tank owner and was liable for the underground storage tank maintenance fees that were paid to the board. The petitioner's only contention is that the law, as it operates, is unfair to tank owners. And I do want to take a minute to set forth some legal points for the sake of conversation. So as you're aware, in California, the law does impose the underground storage tank maintenance fee on the owner of the underground storage tank without regard as to who's operating the tanks. So the owner is going to be liable even if there's a contract between the owner and operator where the operator is submitting the fees on behalf of the owner. The owner is going to be liable even if the owner claims he or she did not know that the fees were due. And the owner is going to be liable even in cases where he or she is unable to find out how many gallons of petroleum were put into the tanks from the operator. But as the petitioner's representative pointed out, in those instances, the fee payer can call the board and can ask, or call the department and can seek out otherwise confidential fee-related information that was provided by the operator or by the petroleum supplier concerning the number of gallons of petroleum placed into the tanks. I also want to speak to Regulation 1213, which provides a process, a contractual process, whereby the operator and owner can set up a formal contract for the owner to allow the operator to pay the fees on his behalf. And in regulation, it specifically states that any fees not paid by the operator under that contract, the operator is responsible for, as well as interest and penalties related to those fees. So if that contract was to be executed, there would be that added contractual protection. Overall, as you can see, though, the Revenue and Taxation Code and the Health and Safety Code unambiguously impose the underground storage maintenance tank fee on the owner. And the board's regulations are there to further implement, interpret, and make more specific these statutes. And any changes to these codes, as is being proposed by the petitioner's representative, would need to be made through the legislature. So that being the case, and seeing as though there are no disputes concerning who the tank operator is or concerning the amount of the fee due today, we concur with the opinion of the Appeals Bureau and recommend denial of the petitions. With regard to the request for relief from penalty, I have a date that was granted on May 8th, 2015, and is not at issue in the hearing. Thank you.
Thank you. Answer my question. Members? I have a question.
Excuse me, Ms. Harkey, but the taxpayer has rebuttal.
Oh, I'm sorry, you have rebuttal. I'm sorry.
That's okay. Penalty was, relief from penalty was granted, relief from collection fees. How was that handled?
There are none.
I don't believe there are collection fees.
I'm not aware of any.
We can't, you can't talk back and forth like that. Can you just rebut?
Oh.
If you wouldn't mind. Thank you. It's not a conversation out here, it's a hearing. So if you would just, respond to what was just said. You have 5 minutes to do so, and if there's questions, we can ask you and you can ask us at that point, and we can get some clarity.
Okay. Is my understanding there were collection fees that were paid?
Do you have any other comments, or is that your rebuttal?
Oh, that was my rebuttal to that comment. All of the facts stated by the staff are true, but they do not solve the problem of allowing a tank owner to file a timely and accurate return. If they don't know what the accurate gallons are that were purchased during that reporting period. And the law just states that the board can divulge confidential information. It doesn't say what information that they can provide. It doesn't say where they'll get that information, but apparently that information is not available at the time return is due on the 25th of the month following the quarter. So it's a deficiency in the law. And I understand it's a legislative process, but the board makes legislative recommendations, legislative change recommendations, and I don't know if that's ever been handled at all or taken care of.
Okay, is that it?
Not that I know of.
Yeah, okay, thank you.
I just have one simple question.
Yes.
To the department, was there a collection fee, and is that something under the statute that this board can cancel?
There is no collection fee that I'm aware of.
And if there was a collection fee, do we have the authority to cancel that fee?
I'm not aware of any authority to cancel a collection fee under the underground storage tank maintenance fee law. There is.
I believe under the fee collection procedures law.
Oh.
But we have an
Appeals, can you speak to that?
Reasonable cause, the board could relieve it. I don't know if I'm looking at Iris right. This shows that there was a collection fee, but that it was abated or removed, but our hearing summary shows no penalties at issue of any kind at all.
Okay.
Thank you. I have one question of the representative of the taxpayer. Wouldn't it be possible to get a lease that required some reporting to you on a timely basis?
There are several ways to do that. Of course, a lease is created at the beginning of a
transaction.
relationship.
Right.
And you could either also transfer title, as you're leasing the land, you can also transfer temporary title to the tank to the lessee. That would actually create a situation where the lessee is responsible for this tax.
Well, I think the law is pretty clear. It's pretty clear as to what the situation is, and I think that, the contract between the lessee and the lessor is a totally different animal that may have to be negotiated with understanding that there is a liability here. I mean, if I was the lessor, I would probably ensure that I made the payments myself and had the amounts and the invoices to do so, because I was responsible to make the payments. I wouldn't just assume they were being made. So I think that's kind of a bit of a problem. And my staff is saying it looks like a collection fee was abated but possibly paid on June 18th in 2014 and added back. Appeals, is that?
I don't have the ability to verify that. If you guys,
Damian Armitage for the department. I don't either, but to the extent that any had been assessed, we would not oppose.
Okay, you can make an adjustment for that. Okay. Any more comments? I'm going to just make a motion to move this along. I'll make a motion to deny the appeal, but to ensure that any of the collection fees that I have here noted possibly paid on June 18th, 2014, or any other collection fees be eliminated from the amount of the disputed tax. Thank you. Disputed amount. Do I get a second?
Could you repeat your motion?
My motion is to deny the appeal, but to ensure that the disputed amount does not include collection fees which may or may not have been paid already or added back.
Well, second, the point is just that the issue is to waive any penalties that may have been inadvertent.
Right.
Or any collection fee, of which then the staff was supportive of.
Yeah, collection fee or penalties. The penalties have already been waived.
Yeah.
The collection fee may
Yeah.
or may not have been paid or not. So just be sure that it's just the disputed fee.
Yeah.
We have a motion and a second. Is there any objection? Hearing none, such will be the order. Thank you.
Members, now that we kind of done away with that,
We're through.
the
I'm sorry.
taxpayer did point out some inequities that exist in the law. And maybe to the extent that we can have a discussion with the taxpayer relative to those inequities and see if there is a legislative fix or an administrative fix that can allow them to comply with the law in a timely fashion. Department did an exceptional job, by the way, of kind of did a good job, young man.
Thank you. And with regard to those conversations, I think the Department of Toxic Substances Control would need to be involved, since it really harkens back to the health and safety code that puts the onus on the owner.
Right,
Yeah.
if they just wanted to be sure they got paid.
And the fact this can go back 8 years. What do you call? I mean, that really, there should be a statute of limitations on this. Anyway, just.
Okay. Next item.
Our next item for today is item G, Tax Program Non-Appearance Matters Consent. These items may be taken in one vote.
Move adoption.
Second.
Any objection? No? Such will be the order. Next item?
Our next item is G2, Franchise and Income Tax Matters. These matters may be taken in one vote.
Motion?
Move adoption.
Second.
No objection? Such will be the order.
Our next item is H, Tax Program Non-Appearance Matters Adjudicatory. Item H1, Legal Appeals Matters, and we only have one item.
I'll move to deny the petition.
Second.
That's a motion by Member Harkey, a second by Member Ma. Any objection? No, such will be the order.
Our next item is the administrative session. We have item P, other administrative matters. Item P1 is the Executive Director's Report. Item P11, Organizational Update.
Welcome.
Chairwoman Harkey and members, good afternoon. David Gow, Executive Director. I'd like to provide a brief update on the transition occurring as a result of the enactment of AB 102. We have made some progress since my last report to you at the July board meeting in Irvine, but obviously there's still a lot of work to do to complete the transition process. With respect to ex parte, at the last board meeting, there was a lot of discussion regarding the ex parte communications and whether the new law applied to communications that may have occurred prior to July 1st. We did receive an AG opinion on August 4th indicating that there is no retroactive application, which has been shared with you. Mr. Nanjo is coordinating with the AG's office on training for you and your staff in this area. And I've also provided, prior to the hearing, a brief written guidance to you per Mr. Nanjo, along with him making a statement at the Tuesday hearing on how to report any prospective communications in the meantime until more formal training can be provided. With respect to executive CEA positions, I'm happy to report that I'm close. We're in the process to fill the Chief Counsel and Chief Deputy Director positions. I am in the examination process on both positions and anticipate that they will be filled in September. We continue to work on filling the remaining CEA positions, that of the Taxpayer Rights Advocate, Chief Communications Officer, and also the Legislative and Research Chief. I continue to meet regularly with GovOps and their transition team, the new executive leadership of the California Department of Tax and Fee Administration, and it really all in the spirit of trying to make this transition from one department into two and ultimately three when the Office of Tax Appeals comes online in January. As I mentioned in my last report to you, really one of the biggest challenges has been the lack of legal staff support for the BOE. But I do want to thank the Department of General Services, specifically Mr. Henry Nanjo, for assisting us here today and for also providing other legal services. Mr. Nanjo has been assisting with the onboarding of the two new to state service attorneys that were assigned to the BOE, and he's also been taking the lead on board BOE litigation matters. So I appreciate his assistance during this transition. We continue to work through memorandums of understanding that will provide the BOE with the necessary administrative services as required by AB 102. The MOUs to be entered into include one for fiscal services, human resources, including labor relations, information technology services, and communications and external affairs services, which includes the video production, streaming of board meetings, customer service through the call center, and updating of publications and other communications. I'm also working on entering into an MOU with CDTFA for legal services, and I understand they're working on that draft MOU, and I do look forward to receiving it. Recently, I sent your offices drafts of your budgets for the current fiscal year. I also included a draft of the entire BOE budget. I should note that it's still being revised as we continue to reconcile positions with the CDTFA and GovOps. Again, I plan to reach out to your offices probably next week and follow up to that email to see if you have any concerns and work with your offices. The BOE executive office is now located on the 24th floor of this building. Last month I mentioned to you that I'd be moving with my staff to the Natomas building, but consolidated space was found for us here in this building, and it does really assist, especially during transition, to still be here at 450N. So I want to thank CDTFA for their assistance in providing us with that space for our current needs. In closing, again, as I mentioned, I'll continue to work cooperatively with Secretary Badger and her GovOps team, Mr. Nick Medeiros, CDTFA's Executive Director, and his leadership team, as we try to keep the interests of the employees and the stakeholders of both agencies at the center of our effort. There's obviously a number of transition issues still to be addressed, many of which present them to us quite regularly. And I plan to continue sending emails to you as well as providing these monthly board meeting updates. I'd be happy to answer any questions at this time.
Thank you. Anybody have any?
Madam Chair.
Yes, Member.
Thank you, Mr. Gow, for the update. I'm presuming that in this process, there is somewhat of an analysis to determine the needs of the agency, appreciating the time lag because of just trying to figure this all out. But let me encourage that, and at the same time, whenever that analysis is completed, I'd love to have an opportunity to kind of review that. Looking at the staff configuration, previously the property tax unit had 6 lawyers, and then it had the benefit of the economy of scale of being able to access the other lawyers in litigation and so forth and so on. It might be in the best interest of the state to assure that that staffing is available to the agency, and as opposed to an MOU, to have that staffing service available, and particularly with the 6, potentially with the other services that the other units within the legal department may have been operating on behalf of the property tax at a 20% level, 30% level. I really don't know what that is. And then because it does affect the capacity not only of the members to be able to make decisions as it relates to member activity, not having legal counsel that can provide that activity. It also speaks to the capacity of the agency. We've experienced that where we have the new department drafting a response to a legal response, and our department drafting a legal response. And I was a little surprised that we didn't just allow CDTFA to go ahead and do the work because, quite frankly, it didn't appear that we had the staffing capacity. I use that as an example that I believe may exist in the other areas as well. The legislative area, for example, as I recall, I haven't seen the updated version, but there was only one position for the legislative unit, which begs to question the administrative support.
Correct.
And the capacity of them being able to deal with the legislative units, activity. The other thing that our office is kind of reviewing as a result of concerns expressed to the Property Tax Committee from the interested parties is there are 3 units that were transferred to CDTFF. The timber unit, which is, it appears, our initial look at that is that that's a constitutional function of the BOE, or so integrated into the constitutional function of the BOE that it may cause some redundancy. And there are a couple other units. The one is I think I mentioned it last time, but the property tax exemption?
Yes, I was going to say, there were 4 units of property tax that were transferred over. Timber, you mentioned.
Yeah.
The welfare exemption area.
Right.
The legal entity ownership program, as well as the tax area services section that maps the tax rate areas in California.
So we're receiving concerns about that. We're also receiving concerns about just clarifying the board's capacity and ability to conduct the interested parties process, the rules as it relates to the property tax unit.
Yes. So I fully anticipate having more to report to you very soon in this area. And I think that these are very good points that you raise and that we have been discussing with CDTFA and GovOps.
Okay.
And again, I look forward to being able to share something with you very shortly.
All right. Thank you very much.
Thank you. I raised some questions on the member office leases
Yes, you
that I'd
have.
like to have have circled around, because I think that as we get into the next budget year, I don't believe that our our smaller BOE can absorb that sort of thing, and especially with what we assume will be reduced staff with reduced responsibilities. So I would like some follow-up on that with all the members, see how we're going to handle that. And since the legislation requires that we move as soon as possible, I just want to be sure we're not in violation of statute and that we're not torpedoed in next budget session for not having adequately assessed our situation.
Very good. There is provisional language in the budget, as you're all aware, and it does put responsibility on the director. So I will be talking to each of your offices and working with the Department of General Services as well to make sure that we are complying.
Okay, thank you. But since we appoint you, it falls on us. You understand
Yes,
that?
it does. And it's
Okay.
very high on my list of things to keep
Okay,
in mind.
thank you.
Mr. Gow, did I include LEAP? I forget.
Yeah.
LEO?
The LEOP?
Yeah.
Yes, you did. Yeah, we
All right,
did.
thanks.
Thank you.
Is there any other questions? Everybody's okay? Okay, thank you very much.
Thank you.
Next, I believe we're closed session, is it? We have to wrap up our closed session?
Yes, our last item for today is closed session. The members will now go into closed session to discuss pending litigation and personnel matters.
My behind silver.
And we're
session and discuss pending litigation and personnel matters, and there are no announcements to be made.
Okay, thank you. Well, we will adjourn this State Board of Equalization meeting, and we'll see you all in September. Right?
See you in September.
See you.
See you.